Hello, everybody. Welcome back to another episode of The Market Close. It is Friday, November 8th, 3:45 p.m. Wall Street is the greatest show on planet Earth. And if you are an investor, you have a front row seat to the show. Folks, this has been an incredible day. Really, it's been an incredible week. And I mean, what can you say? This is why you invest. This is why you go through all the due diligence, the earnings calls, the emotional up and downs for the moment that we are having, not only today, but for this week. Tesla, 321, up 8%. It was at 328 at one point. Was trying to go for 330. The stock was at 230 not so long ago. A couple of weeks ago, it was at, I think, 250 at the beginning of the week. Right here, we're at $321, up 8.2%. The S&P 500 is at 597 right now, but we did hit 6,000 on the S&P. We did hit 6,000 on the S&P. The Q's at 513. Costco's up 3% on the day. Palantir looks like maybe in 15 minutes we get a close above $58. Again, Palantir earnings were on Monday. The stock was at $40. Now we're at $58, up 4.2% on the day. You've got Robinhood that is having an incredible day right there at $30.32. Hopefully we get that close above $30 on Robinhood. That would be important. Bitcoin as well is above 77. It was above 77,000. Right now it's at 76,700, but we were at 77,000 today. And then you've also got this guy that decided to run towards the end of the day, which is SoFi. SoFi is up 8.7%. It is almost at $13. Just an incredible day. These are the SoFi options that we bought. I think, it'll tell us when we bought them. We bought them on 9/20, September 20th. So about a month later, they are up 230%. Again, the bet here is that we used 3,500, bought 100 of these call debit spreads at 35 cents. They're now worth $1.14 each. And if SoFi goes to 20 by 2026, January, this would be worth about $50,000. It would be about $47,000 of profit from a $3,500 trade. I don't know if SoFi goes to 20, but SoFi is finally acting like Trump won the election because you had Bank of America, JP Morgan, Wells Fargo, Citigroup, all these banks going up. SoFi should have been a recipient of that momentum as well. Really didn't get it over the past couple of days. We even saw Kathy Wood sell a bunch of SoFi yesterday. Now SoFi up 8% on the day at $12.93. So it's just an incredible market. Again, Palantir at $58.30. But there is a question. There is a big question that all of us have to ask ourselves. Thank you, everybody, for being here on The Market Close. Thank you, everybody, today. I believe Steve will be here probably in 20 minutes. Most likely, if he doesn't call in, he'll be on the actual show itself. But he should be here today. There is a question that we have to ask ourselves. And that question is fundamentally, and I think it's an important question to ask ourselves. And if you're not asking yourself a question on a day like this, then maybe you're not really thinking about how nuanced this market is, which is okay. But I think as a prudent investor, someone who's trying to be sophisticated, this is a question everyone has to ask themselves. Before I get to the question, George, thank you for the $50 super chat. Appreciate it, George. Thank you guys for the super chats. Again, you don't have to send it. Kasim, thank you also for becoming a channel member. Appreciate it, George. Thank you again. I think, George, you're big on SoFi, so congratulations to you on SoFi. Thank you for the $50 super chat. Here's the question. Is this 2021? That is the question. And I think that's a question that everyone has to be asking themselves. I know some of you guys are at least feeling if this question or if this market is euphoric like 2021. And I have a simple answer. I'm going to give you a definitive answer. There's no wish-washiness here. This is the answer. The answer is no. It is not 2021. And here's the reason why. Pinterest is down 16%. Trade Desk is down 5%. Redfin is down 15%. Affirm is down 9%. This is all today. Airbnb is down 8%. Monster Beverage down about 1%. Airbnb now actually down about 9%. Sweetgreen, the restaurant, is down 7%. Serve Robotics down 15%. Yelp is down 2%. Arista down 7%. Unity down 7% on the day. Why do I bring up all these companies? Because in 2021, everything went up regardless of numbers. Again, a stock like NEO was at $60. It was at $2 in the end of 2020 or the beginning of 2020. So, or like the midpoint around June of 2020. I know this because I bought it at 3, sold it at 6. So I remember this very deeply. And when I went to 60, it was, some feelings of regrets. But the point is, did it deserve to be at 60? Probably not. NEO is now at $4. And NEO is emblematic of the fact that in 2021, no matter what you were saying on your earnings call, everything went up. To me, this feels like a market that is willing to allocate capital if a company is executing A, B, fits within a broader long-term thematic, whether it's wealth transfer for Robinhood, AI for Palantir, Tesla, NVIDIA, rates coming down and good for loan originations like SoFi, and has exceptional management that can capitalize on rates coming down. So a Trump presidency is pro-growth and strong for the markets. And the fact that you have some amazing companies that are getting momentum today is probably because the market's pricing that in. But if other companies are down, like Trade Desk and Pinterest, which are reasonably strong companies, Airbnb, everyone knows Airbnb, that means the market's not giving capital to those companies because the market is not impressed with their earnings, which means the market's being rational to an extent. And so is there some level of irrationality in valuations? Yes, there is some irrationality here when it comes to valuations on a bunch of different stocks. But as a whole, on an aggregate, is the market being irrational like it was in 2021? I don't think so. I really don't think so. B. Worthy says, no, it's not 2021. Back then, we had a huge qualitative easing, pumping the markets way too unsustainable. This is much more organic and has a restrictive Fed policy environment. That's another big argument. Look, we have interest rates that are still higher than they were back in 2020, even though they're not 5.5% anymore, still at about 4.75%. And on top of that, we were raising rates at the end of 2021 going into 2022, which is why the bubble of the 0% interest rates finally collapsed. Right now, we're cutting, but we are not quantitative easing the way we were back in 2021, printing trillions of dollars and keeping rates at zero. So from that perspective, the fact that companies had to adapt, SoFi, Robinhood, Tesla, Palantir, they all had to adapt to high interest rates. They couldn't just not do anything during the past 2 years as interest rates were high. They had to change their entire business models, adapt to it, learn how to navigate it. Tesla, 0% APR financing. All these companies had to figure things out. Now the market is rewarding these companies as rates are coming down, and they believe because they were able to figure it out over the past couple of years, something like Robinhood that totally transformed their business from a ZERP phenomena to one of the best companies in the world to get 5% APY in an easy way to deposit money into. All these different things they've done is now giving the market a lot of excitement that when rates actually do come down, you get a real tailwind for something like Tesla, which a lot of people can afford a Tesla if rates come down. And then B, for Robinhood, I mean, the amount of trading volumes on Robinhood already through November, I can't even imagine it. If October was already one of their best months, well, the market's hitting new all-time highs in November. So those transaction volumes obviously should be doing very well for this company, which can offset some of the net interest income that's coming down. So as a result, I think it's not 2021. I think the market's continuing to give it more momentum. You got Kava up today. You got Boeing up a little bit today. Archer Aviation up 10%. And I think that is a good thing because that is a sign of a healthy market. And that is a sign of a market that wants to allocate capital into companies that are meaningful. SoFi, again, yeah, wow is the word on that. SoFi, $12.97, a $13 close. I don't know if the market makers let it get there, but I think there is a shot because it makes sense for, SoFi to get momentum as we have a Trump presidency. 2021 was also riddled with malfunctioning businesses across the country due to municipal lockdowns. That's another good point. We don't have lockdowns, to my understanding, in this country right now. There it is. There's 13. I think we got to ring the bell for that one, folks. SoFi, congratulations to SoFi shareholders. $13 on SoFi. Look at that for SoFi. Look at that. And because we don't have lockdowns, people might actually want to start businesses, which means they may need a loan. They want to buy new cars because they're traveling. SoFi could potentially give them that loan. SoFi getting the tailwind of rates coming down. Money market updates. So $80 billion entered into money market funds this week. I think a lot of that was protective against the election. And I do think some of that money will be coming out of money market funds because if you're seeing this market, dude, and you're a fund manager and you're not participating in it, there is a level of chasing that can happen. Here's another point that's really important. Tax loss harvesting will happen, but will tax loss harvesting happen to the extent that people think it's going to happen? Meaning, if you're up a lot on your stocks currently and you sell in 2024, which would, be bad for the market because you're selling, so that's sell side pressure, you've got to pay a lot of taxes very soon. Versus if you wait until January, you get to wait another 12 months before you have to pay, or 16 months because you pay taxes in April, at least in the United States, before you pay those taxes. So I think there's a decent amount of people that are going to wait until 2025, maybe January, February, then take some profits just so they can wait another year to pay those taxes, which means the market can continue to gain momentum because you just have people that are A, chasing the market, and B, not selling because they obviously don't want to take any profits anytime soon. Myra says, are you still buying at these prices? I'm currently not really buying at these prices. I actually asked the question on Twitter. Let me know what you guys think. A, are you taking profits? And B, are you buying? That was the question on Twitter. And you guys can put what you're saying in the chat. I'm not taking any profits, even though I'm not buying. Look at Robinhood, $30.47. 6 minutes left. I think we get that $30 close over Robinhood, which would be awesome. But that's okay. Again, if you've been in the markets for like the better part of 3 years now, definitely since January, I don't think there needs to be that much pressure to buy. If you've built out substantial positions, and for SoFi, people have had a long time to build out positions. Why do you feel compelled to buy at 13 if you were buying a ton at 6, 7, 8, right? Unless you actually want to get more of the company, that's fine. But if you don't, I don't think you need to have FOMO. The FOMO is for people that were not in these stocks. And it is what it is. I've had FOMO before. I've also been on the opposite side where I don't need to have FOMO. And I think everyone's had both sides of that trade, but I don't think you need to be buying right now to participate if you've been buying all year, because you're participating in the overall capital appreciation. 58.37 on Palantir. I do think we can close above 58 on Palantir as well, which is amazing. And then obviously we've got Tesla, which is the story of the day right here at $321. Starbuccaneer says they bought AMD. I don't hate AMD, and it is underperforming against NVIDIA. So for the long term, not a bad purchase at all. Palantir year to date, 250%. That's incredible, right? We're outperforming NVIDIA. NVIDIA year to date is 206%. Palantir year to date is 250%, which is incredible. Pretty incredible. So we're seeing some strong momentum in the broader equity markets. Where's App Lovin'? That thing was up 40% the other day. It's up another 17% today. This one, I mean, if you got into this one, congrats. Sometimes there's some stocks that aren't that big, but people know about them, and they end up going pretty vertical, and App Lovin' has gone absolutely vertical. Look at Robinhood, folks, $30.50. 55 cents. Wow. And it makes sense. Again, this makes sense. Robinhood is a bull call on the market. And if the markets are going up, then obviously it makes sense for Robinhood to go up as well, given Robinhood is benefiting from all the transaction volumes of the bull market in terms of how people are trading and ultimately depositing more money into their brokerages, right? All of that stuff is good for Robinhood. So that's what we're seeing. Pretty strong day. What else do we have going on? Palantir 58.39. Apple is down on the day. Okay, so some of that money. Wow, Google's down and Meta's down. Okay, so hold on. I actually haven't seen these positions. Wow, look at that. Holy crap. All of Max 7 is red. Except Tesla. Tesla's 8%. Tesla 1.03 trillion. Elon's now worth over 300 billion. All this money from Amazon, Google, Meta. Now, granted, Amazon had a good run yesterday, but all this money is leaving. And it looks like it might be going to Tesla. NVIDIA also had a pretty good run this week, so it makes sense that it's down 1%. But Tesla is really getting all of the love, which is amazing. Those 500 shares at $23.50 must feel good, Amit. Yeah, those feel good. But also, I was going to buy more than 500 shares. I had the money to, but I didn't. And I bought these instead. I think I showed you guys these. These aren't as... No, actually, these are becoming more liquid. So let's show you guys this. So I showed you guys this. I bought $37 $40 call debit spreads on Hood for January 2027. So we had a lot of time for Robinhood to get above 40. They're up 50% since October 31st, since Robinhood tanked after those earnings. And if I wanted to close them, the way you can check right here is you can go to Robinhood, and if it says medium fill likely, then you're more likely to close. So if I wanted to close them at 80, we get a high likely. If I want to close at 88, we get a medium. If I wanted to try 90, you get a medium. If I want to try 95, you get a low. So basically at 92-ish, 91, yeah, round about 90, they would let me close this. I paid 61 cents for them. So would be able to close them up about 50%, which is not bad. So this is what I did instead of buying a ton of shares, because I wanted to buy more Hood shares, but I chose the options instead. So if we simulate returns, if Robinhood is $40 by January 2027, this would be a max profit of $37,000 off of an investment of $9,500, which would basically be a what does that look like? 394% return. So it'd be a 400% return if Robinhood gets to $40, because we got the options when they were at $23, which is not bad. Not bad at all for Hood. So yeah, I mean, again, a lot of buying the dip across a ton of these names has made sense over the past couple of weeks. Definitely, before Trump became president. And then the Trump presidency just kind of exploded this stuff. We got Robinhood at $30.58. BidX is at $39.34. The Bitcoin mining ETF up 1.33%. CleanSpark was a nothing burger. CleanSpark is still halted, but the news came out today that it was like a clerical error when it comes to the purchase of warrants, so it didn't matter too much. But CleanSpark right here is at $13.57. You got Hood at $30.56, Tesla $3.21, Q's at $5.13, SPY at $5.98. Steve will be on in a couple of minutes right after we close the market. We'll get his thoughts on what's going on. So we'll see what he has to say. Look at Palantir, 58.45. I think we're closing above 58, folks. And then SoFi is trying to get that $13 close. Just an incredible week for Palantir and for the entire equity markets. Yeah, the SoFi run, 9% in a day. But this is what we thought would happen after Trump became president. We knew it would be good for financials. And now SoFi reflecting that momentum. All right, here we go. Friday, November 8th, 4 p.m. It's been an incredible week in the equity markets. You don't get these weeks all the time. This is why you join the investor class and try to get some more economic mobility for your own personal life. Thank you, everybody, for being here. The stock market is now closed. Palantir has closed at its highest level ever, all-time high, $58.42. Robinhood closes above $30.54. SoFi closes at $13. It got the $13 close. Incredible. Tesla closes above $320, $321.22. Just incredible. Just an incredible day in the markets. Let's take a look at some of these other names, and then we'll bring Steve onto the show and get his perspectives. Apple down on the day. Microsoft, Meta, Google, Amazon, Nvidia all down on the day, but Tesla was up 8%. TSM had good October sales. TSM right here is at 201. They were basically flat on the day, but again, those October sales were really good for them, which is why that was strong. S&P ends at 598. Again, we did touch 6,000 today, up about 0.5% on the day. For the S&P. Eli Lilly as well was up about 4%. Again, Palantir 4.5%. Coinbase was 270, up 6% on the day. And MicroStrategy was 270. MicroStrategy was flat on the day, but it was up a lot a couple of days ago, which is why this was good. Axon, I don't really know this company too well, but you guys have been telling me about it. Axon is up 28% on the day. Again, I really don't know what this company does. I got to look into it, but a lot of you guys have been mentioning it to me, so I'll put it on the list. Axon right here up 28% of the day, $45 billion company. I believe they had earnings yesterday as well, and they did pretty good. Some of the companies that didn't do that good today, you had Trade Desk, Cloudflare that was down 4%, Square was down about 1%, Affirm was down 4%, Airbnb again down 9%. DraftKings actually went up after having a double miss yesterday. I guess it got too cheap for the market. Rivian was up 5% after an okay quarter, but not the best quarter. And then Cloudflare down 5%. Toast was up 15%. That one was good. And then Fortinet was down 5% yesterday. Cybersecurity, this one ended up 10% today, which was not too bad at all. Redfin was also down 15% on the day. Pretty incredible day, folks. Pretty incredible. Bitcoin right here at 76,781. Absolutely incredible day. Congrats to everyone. This is why you invest. This is why you invest at the end of the day. Bsoft, thank you for the $5 super chat. Sold Palantir. My cost basis was 16. I sold all at 37. What is a healthy pullback I should look at back at getting in? I'm trying so hard not to FOMO here. That's a great question, Bsoft, and I shouldn't answer that alone because you're not the only one struggling with that question. There's someone else who can hopefully give us some color on how to answer that, and his name is Mr. Dividend Streams. Steve. What's up, Steve?
Man, you got jokes, don't you?
What jokes did I make?
You have jokes.
Steve has some covered calls on Palantir, so he feels your pain right here. Steve, are you in the car? You're driving?
I'm driving, yeah.
All right. Well, we really appreciate you calling into the show. I've got 1,800 people with me, so thank you for being here. Before we get started with our conversation, Steve has a new article out, and that article is on Palantir. We will be talking about that today. I'm going to put that article in the chat. If everyone could please click on the article, potentially read it as well, that would be awesome. That would be great for Steve, even if you don't want to read it, because he's calling a little bit of a top on Palantir, but it's probably important to read as an objective investor as well. All right, Steve, before we get into individual stocks, what's your raw reaction to today's market behavior?
I mean, this is kind of crazy. The NASDAQ's going to break 20,000 next week, it feels like. It's just, stocks just don't go up. I mean, I think everybody should enjoy it while it lasts. Maybe I'm wrong, but it feels like we're getting to a short-term top, at least.
Okay, so my question here, because there's a couple layers to this. Do you think at all that this market is justified in terms of the momentum over the past couple of days because Trump has become president? Like, is that a rational reason why this is happening?
I mean, look, from a momentum aspect, it feels like it can keep going. From an earnings aspect, it feels like it can keep going with a lot of stuff. I think there's pockets that are overvalued. That's all.
So if there's pockets that are overvalued, then I guess the question becomes, when does the rubber hit the road? What has to happen for equities to not have this type of momentum anymore?
I don't know. I mean, if I had that answer, I would be doing a lot better. Look, the bottom line is there's a lot of things that look cheap. I think the change in the administration now makes Amazon, Alphabet, and Meta look extremely cheap.
Why?
Look, the first person that's going to go is most likely Lena Khan. And I've been saying this to you for a long time privately, that when she is out of the picture, things are going to be much different. And now you have a lot of people saying that she's probably the first person that's going to go. And when she goes, the most likely the war on breaking up big tech will probably leave. Now, they're probably not going to be in any position to make any acquisitions, but the whole idea around breaking these companies up because of antitrust or monopoly probably is a lot cooler tone than it is right now. I mean, let's not forget, she wrote a huge dissertation in the Yale Law Review called Amazon Paradox. I mean, she would love nothing more than to break this company up.
Dude, imagine if Lena Khan, instead of writing that dissertation, bought Amazon stock when she did 10 years ago.
She'd be doing a lot better.
She'd be doing a hell of a lot better than complaining about capitalism and free markets. She should have just bought the stock.
And here's my thing. I get it. Like when Microsoft went through the antitrust stuff, that made sense. But I would love for somebody to convince me that Amazon is a monopoly or there's any antitrust violations. Because for a company to be a monopoly, they have to be in a position where no other company can compete, and they are also hurting the consumer. Okay? Amazon is not hurting the consumer at all. In fact, they're empowering the consumer. And they're empowering small businesses to reach a national audience, not just a local audience in their immediate demographic.
Correct.
So
yeah.
It doesn't make sense for that, one. Two, I can rattle off competitors in every field. Cloud, it's called Azure, which is almost neck and neck, and then Google Cloud. You have from shipping, logistics, UPS, FedEx, United States Postal Service, DHL, et cetera, et cetera. From entertainment, Netflix, Hulu, Disney Plus. From shopping, Walmart, who actually is doing just a little bit more revenue than Amazon right now. Target, Costco.
You're back. You're good.
I'm just wondering where there's a monopoly.
No, I agree with you. I think it's hard to find the monopoly here. So basically, your argument is that if Trump is president, the whole idea of the DOJ breaking up a lot of these tech companies is going to be harder to see. They can actually buy companies. They can do M&A, which is great for the banks because they can collect fees. And as a result, we're seeing the market price in a lot of that growth. And that's why we're seeing momentum. That's your argument, correct?
I don't know if big tech's going to be able to do M&A, but I think that it'll make it easier for the companies that are not mega caps to do M&A. But I think breaking up Amazon and Alphabet is off the table at that point, especially when you look at who Trump's going to be listening to. They want to advance technology, and these guys understand how the industry works. Sachs, Chamath, they are going to most likely be telling them, because they've said it on the Olin podcast several times, that breaking up Alphabet would be a horrible thing for the AI revolution in America.
I mean, we're looking at a picture right now on stream of Donald Trump, David Sachs, and Chamath after Trump won the presidency. And I can't help but think, Steve, that Trump's about to fill his cabinet with people that actually know what the fuck is going on with businesses, not these, Tim Waltz types of people that have never invested a single dollar in the stock market.
It's going to be a lot different than his first term, I can tell you that much.
It feels like it's going to be different. We can all agree 2016, Trump didn't really know what he was doing. He was an outsider. But now, it's not that it's going to be perfect, but there's business. Like Elon's a first principles type of guy. If he's helping Trump kind of figure things out, it does look like this can work out.
I mean, think about Chamath has big investments in Grok. Elon's got huge investments in XAI, Tesla, and SpaceX, obviously, which are all AI driven to some degree. He built a massive GPU farm to advance his AI capabilities. Sachs has been an investor and a co-founder in PayPal and all these other companies, Yammer, et cetera, et cetera. Trump is going to be listening to these guys, and these guys are tech guys, so you have to think it's going to be bullish for tech. I don't think there's any way around it.
I think it's hard to say that's not bullish for tech. Okay, so Bay Ray has a comment here. Let me ask you your raw reaction. I want everyone in the chat to answer this question as well. Do you think this is going to be the best 4-year run for the stock market ever?
That's hard to say. The 90s were pretty incredible.
Well, your boy Dan Ives has been saying this is 1995. So can it replicate that? That's my question.
I think it can replicate it. I mean, I a couple months ago was saying it's not even 9 p.m. It's probably 6 or 7 p.m.
Which is why it's weird. You're so kind of jittery right now because you're the one saying it's only 8 p.m. So why are you?
I'm jittery because it's happening without a pullback. That's why.
Well, we did have a little pullback before the election. I mean, like we did see. It was a small one.
What, the yen carry trade, which I said was bullshit? Come on.
No, not that one. I'm literally talking about the S&P was at like 568 last week before the election.
Think about what number you just said. You're considering that a pullback?
Hey, man. We're down 2%, bro. It's back of the pull.
Look, at this rate, we're going to 7,500 on the S&P by the end of next year.
Fuck it. Let's go, baby. Let's go.
I mean, that's where we're headed. We are headed. If we do not have a black swan event, we're headed to where Tom Lee is going to be right. And I am not saying that's a bad thing. I will celebrate that.
Steve, someone had a good comment. I think you'll agree with this. Pox right here says Palantir did pull back to 57 briefly.
Oh, thanks. Realized it was at 43 or 42 on November 4th, 2024, not 2023, right?
I agree. So let's before Palantir is gonna be a long discussion. So before we get into Palantir, I have another question. So Jed right here says big money's about to step in. How are fund managers going to explain to clients that retail investors are up 300%? What is your perspective on money that chases this market?
It's gonna make this could be. You're gonna make a meme about this. Other people are gonna make a meme about this. I really don't care. This could be the greatest melt up you've ever seen. It just could be. We've never had a situation before where everything was working against the economy, but the economy was booming. Yeah. And now you have an administration that's going to come in, that's going to be business friendly, that's going to not try, but cut corporate taxes because at this point, it looks like they're going to get the House too. So if they do, they want to do corporate tax at 15%, that's going to pass. And in the short term, I would think it's going to cause a huge rally. You have interest rates coming down. I mean, there's nothing to stop this at this point. And let's not forget, over $6 trillion sitting on the sidelines that's been sitting in cash for some reason, missing out on a ridiculous rally already, and they're going to be chasing with trillions of dollars. So,
I mean, that's another thing.
That cannot all be money that people are just sitting in cash for a rainy day fund. It can't be.
I agree. So the money market funds historical average is 4 trillion. Right now we're at 6.5. I don't think 2.5 trillion is leaving, but if even a couple $100 billion left, that's a lot of money coming into.
Oh no, trillions are leaving because don't forget that does not include CDs or bonds.
Correct. Yeah. So here's another question then, and then we'll talk Palantir. I asked this question on Twitter today. Would you be taking profits right here after the run we've seen, just in anything like trimming a little bit, or if the next 4 years are amazing, why would you take profits?
I can't say yes or no. All I can say is I haven't. The only thing that's been capital gain consequences, stuff that a call option or call options got called away early, which I've never seen happen before, or something I just I didn't feel like rolling, I just let it go. Otherwise, I haven't actually hit the sell button. So
same.
I can't answer that.
Same. No, I agree. I mean, I think one of the things about being an investor is that if you invested when things were low, the goal is to let it compound, right? That's the point of the markets. And if you want to trim and take some profits here and there, that's fine. But
there's nothing wrong with that.
Yeah, there's nothing wrong with that. But to get out of the market right now, November
Depends where
2021, you
you're
got out
in.
of the market. Congrats, but I don't know if this is the same.
Look, I can't time the market. I've never met anybody that can time the market. And I do believe in the saying, time in the market is more important. And it depends what you're in. If you're in an index fund and you have a long-term time horizon, don't try to play the market. Just let the dividends reinvest every quarter and just keep adding to it. I mean, I think if you're in index funds, there's no reason to try to time it. You're talking about individual equities. I think it depends what your risk tolerance is if you want to protect your downside and how much you're up. I mean, that's something that everybody has to answer for themselves.
I agree. Shout out to Cool Comic Guy here in the chat. He says, dude, just to tell everyone, as a poor disabled vet, thank you for your service, sir. I am so happy. I just hit my first time 100% gains total. Been in a stock market for a year and a half.
That's great. Congrats and thank you for your service.
Thank you for your service. It is just incredible to see people, regular people like you, me, everyone in the chat that is able to allocate capital into the greatest show on earth, which is Wall Street, into the best compounding machine that we've ever seen, and have a year like 2024. Not every year is like 2024, but when it is like 2024, then you got to be grateful for it.
I mean, the NASDAQ's up 40% or 42% in the past year.
I mean, it's just incredible.
I mean, just think about how insane that is with how big the NASDAQ market is.
Yeah. All right, so let's get into the topic of your article today, which is Palantir. Palantir's up another 3% today. Why are you saying that the top is in for now?
I mean, the Palantir community is going to hate me for this, but at some point, numbers matter. And maybe Palantir is going to be that company, just like Tesla still is, that the rules don't apply. And that's fine. And look, Palantir can keep going up. I've always said, I think it can go to 100 or 150 by 2030. I still think it's going to be the second most important software company behind Microsoft. I am very bullish on the long-term prospects for it. So let's start with that because I'm not selling. But for the time being, I think that the valuation is more than stretched. And I think that this needs to come to reality. And people will lose enthusiasm potentially. I mean, maybe I'm wrong on that. But when you have this company that is now over 130 billion market cap, I believe, after today's run, and they're not even doing 3 billion in revenue, and they're trading at a ridiculous PE, at some point the numbers matter and the financials matter, regardless of what problems they're solving, regardless of how much better their software is than their peers or competitors. The business metrics matter. And when you look at the numbers I put together in that article, these valuations don't make sense.
So let's break down some of this from first principles as well, and then we'll get into the numbers. So I think a lot of people are not selling, even if a lot of people are not buying. But the stock market, the Palantir can't go up unless people are buying it.
Have you seen the volume? Obviously, people are
right. So when
well.
I mean people, I mean the community. I mean, like a lot of people that I know, they're not.
I
touching
agree. I don't think the Palantir community is selling at all. I think that people are chasing, people are getting in.
So that's my question. Palantir community is probably not buying or selling. So then, who's buying enough to take the stock up? Call it 40 billion in the past 3 months, because that's not retail, and we know that's not retail. So if it's not retail, and the institutions that stupid to pay these prices that you're saying are ridiculous to pay?
Maybe, and I don't even know if these are ridiculous prices. Maybe a 250 billion market cap is ridiculous. But just think about this: if it keeps going, and it gets to roughly like 105 a share, it's going to have the same market cap as Salesforce, and the same market cap as Cisco, and it's generating not even a tenth of the profits. And that's why I'm saying at some point numbers matter, because you have to look at it from a business perspective too. And I am not angry by any means. I don't want to come off that way. But when you read through financial statements and you look at businesses and you think about we're going to have M&A activity coming on, if you are a big conglomerate, Oracle, one of these big companies, and you're looking to buy a company, are you going to buy a company that is generating $1 billion in free cash flow, or a company that's generating 10 billion in free cash flow at a lower valuation. I mean, it's just at some point numbers have to matter.
So I guess the question is, let me give something else to you. OpenAI is worth 157 billion on the private markets. Is there any argument, and I've talked to a couple of people that really think this is the case, that Palantir is being comped to OpenAI, and once it gets to 157, so call it 70 a share, that's when the market will relax?
I have no idea. I've never seen OpenAI's financials, so I have no idea.
Well, they're losing money, but they're growing at triple digits. I will say OpenAI's potential, you could argue, because they're a consumer company, right? They have 250 million users. They could probably get to 1 billion users one day. That's really big. But if it's just paying $20 a month or something, right? And Palantir gets BP to give them 50 million a year or whatever, like both companies could be pretty exponential if the AI thematic stays. So maybe the market's feeling, if OpenAI is the identified foundation model winner, the rest of them are just like sub OpenAI, and Palantir is the foundation software enterprise AI winner, maybe they've got to be comped together.
I don't know that you could. I mean, yes, you can look at it any way you want, but I think Palantir needs to be looked at as more an enterprise software company against other enterprise software companies. And just look at the growth rates. I mean, look, I said this to you before. Pull up the article at the table because I'm driving. As of yesterday, I don't have the updated numbers, but as of yesterday, less than 24 hours ago, Amazon was expected to grow their earnings per share by 48%, while Palantir is expected to grow their earnings per share by 47% over the next 2 years. And Palantir was trading at 99 times 2026 earnings, whereas Amazon was trading at like 26 times 2026 earnings. Tell me, in what world does that make sense?
And the chart you want to pull up is the cash flow, the free cash flow?
It's the one right after, the forward priced earnings.
Forward price. Oh, this one. Okay. Can you guys see that? It's a little low. Okay, so Palantir, I'll read the numbers. Palantir's 2026 forward PE is 99. Cisco's is at 13. Adobe's at 21. Oracle's at 21. Salesforce. Okay, so obviously Palantir is trading at a 4x premium on a 2026 forward PE.
But I just look at Amazon versus Palantir. Amazon trades at what, 26, 27 times?
28.
And they actually have a percentage point more growth over the next 2 years. So the whole argument that people always made about growth companies getting a higher valuation is you're paying for growth, right? You're paying for growth. Palantir grew 30% top line year over year. You're paying for growth. Well, you're paying 99 times for 47% EPS growth when you can pay 26 times for Amazon for 48% EPS growth. Like, the numbers don't work.
So,
and look, Tesla was broken for a long time, and I was very vocal about that. Palantir can be broken for a very long time too, and it can keep going up.
What about this comment? So Tyler says, what you left out of your article is the speed at which it will grow into its valuation, which defies the financial statements.
The speed, it's not even generating $3 billion in revenue.
What if they start growing 50, 60%? I'm just throwing it out there. Would you mind?
So let's do the math. 50% growth. Do 100% growth. 100% growth year over year puts you at, let's say they do $3 billion this year. That puts you at $6 billion next year, $12 billion the next year, and $24 billion the next year. So that's $24 billion over the next, 3 years?
Yeah.
At a 30% free cash flow?
Yeah.
I mean, what is that? 8
billion, yeah.
8 billion free cash flow. I mean,
then the market cap today, if the market cap stayed the same, 130 divided by 8, it would be trading at a 16 times price to free cash flow,
which would be cheap.
But you're assuming 100% growth for 3 years.
That's assuming 100%. That would be a little bit cheaper than Alphabet, which is at like 20 times. But that's a 100% growth rate, which we know is not going to happen.
Yeah.
So if you do 50%, it's going to take 6-7 years to get there. Which I'm just saying, that's with everybody else stopping with no growth and everything continuing to go right with Palantir.
So let me read you another super chat. Someone says, Palantir is a monopolist in applied AI software, which is the next big thing, and that's not being taken into account into your valuation model.
We don't know that. And we don't know that because you can't just say that there's going to be one ring to rule them all, considering the software companies out there. Microsoft is working on things. Salesforce is hiring 1,000 new people for sales positions for their AI agents with Einstein. These companies are coming up with things.
But Steve, see, so this is a good discussion. I saw that post today. Salesforce, like, we're going to hire 1,000 people to sell our AI agent force, whatever. Palantir is not worried about selling it. They're worried about making sure customers can use it in a boot camp and then ask for money. Like, don't you think there's a cultural difference there that really matters?
I get that. But
that's worth a premium to the market, I feel.
Not every company is going to use Palantir software. I mean, we're making assumptions that everybody is going to utilize this. And this is going to be the only thing they utilize. There are companies that utilize multiple programs. At some point, the dollar spent on software stops and dries up. Like, we are assuming that Palantir is going to grab so much. I'm not saying they can't, but look at Snowflake. And you and I make jokes all the time that it's a melting ice cube. But look at the EPS growth that Snowflake is expected to generate.
I mean, well, but sure. But my point is, like, Palantir is actually, like, useful, right?
Right. I get that. But once again, you're paying for growth. Like, everybody says you pay for growth. Well, you can pay a better valuation for a lot more growth than other companies.
Okay, so then that begs the question: if the numbers don't make sense to you, and in Tesla in 2019, they didn't make sense to you either, and you called it a broken story at that point, but it was up 20x, so it was broken to you from a numbers perspective. It was great for Tesla shareholders. Do you think there's a world where Palantir just plays out that story where it just stays overpriced forever?
Palantir can go to 250.
Steve Quirk is going to be on CNBC after the break. Okay, so I'll load that up, Eric, and we'll take a listen to that in a little bit.
Look, Palantir can keep going up. If people keep buying, and you made a good point on the phone before, or one of these Louis Vuitton bags worth 15 grand. I mean, does somebody?
Yeah. Okay, Eric. So we'll listen to this after this discussion, Eric. I have it loaded up and we'll listen to it. So that's a good question, right? So people are saying, why would you pay $130 billion for Palantir? Why would you pay $10,000 for a Louis Vuitton shirt? It's like, I know a company is different than a shirt, but at the end of the day, Palantir is the same principle. It's the same principle, right? It's a brand that you want to take part of. You expect something out of it, whether it's looking cool or whether it's returns. And maybe there's an argument there that brand is so special, so unique, so different that it simply justifies a higher premium than Snowflake.
And I understand that argument. And I know that when you are buying shares in the company, you are not buying the whole company, but you are still buying an equity stake in the company.
Correct.
And as a business person, it is very hard for me to wrap my head around the theory that valuation at some point doesn't matter, because if you are going to acquire a business, you don't want to buy a business that's going to take 70 years to pay you back.
Yeah.
Go to the free cash flow. What is Palantir trading at on price to free cash flow? 120 something times?
Yeah, no, it's close to 100, 130 now because the market cap. Yeah.
130. Okay, so 130 times. So that means that at today's valuation, if somebody was to acquire Palantir without a premium, it would take them 130 years based on their current free cash flow to generate what they paid for the company. Now, let's say that Palantir continues to grow, blah, 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 blah. Maybe it takes them 60 years. I mean, tell me that makes sense. Like, when companies acquire other companies, they're not just doing it to increase their revenue. They're doing it for many reasons. To cut costs, because there's synergies. You see it a lot in the oil and gas industry. Cross-selling, combining platforms. There's a lot of different reasons. But the bottom line is, if you're going to acquire Palantir right now, you're not paying 130 billion. You're probably paying 160 because there's going to be a premium slapped on. And this is a company that's maybe generate 1 billion in free cash flow this year. When does it get to 2 billion?
No. They're definitely doing $1 billion. They said they guided for an excess of 1 billion. So
yeah, hold on. They don't talk about pure free cash flow. They talk about adjusted.
I'm not fully sure about that. I'm pretty sure
they give you adjusted numbers in all the material. And you know that's a pet peeve of mine because that's bullshit. But they really don't spend a lot on CapEx anyway, and that's probably why they do it. They only spend a couple of million on CapEx.
So I guess, first of all, Derek, thank you for being in the chat for the gifted 20 memberships. Derek said, I hope everyone got rich today. Shout out to you, Derek. Thank you. Thank you again.
He just buys memberships from people.
I mean, I got some dirt on him, bro. Like I told him, I'm gonna leak it if he doesn't keep.
Derek should buy me a membership. What's going on here?
Well, you got to be in the chat to get a membership, so that's what you got to be there. He said hi, Steve.
I don't know how to multitask.
That's true. He said hi, Steve, right there in the chat. So he's a fan of you. He likes listening to you. So, okay. So Steve, here's the thing. We can all agree objectively, Palantir is expensive here at 130 billion. Numbers don't make sense. My deeper question here is, now that Trump's in office, we got our boy JD Vance there. What do you think could break Palantir to get us back to 30? Do you think there's
I don't know if there's anything, and I hate saying that because it just seems like software is going to be more critical, especially with the people he's going to be listening to. And you got to think that they're going to try to automate a lot of things. I mean, if it all depends what happens in the next 6 months, because Trump will be in office in January, and then the first 90 days is going to really be laying out the plan and working on getting stuff done. Does Ron Paul and does Elon come in, and do they bring Chamath in to look at things? And do they really start looking at how they can automate things? You know that a big pet peeve of a lot of people is, with all the data points that we have, how does the Fed continuously look at lagging data? Why is it not real time? You got to think that they're going to come in and try to get everything real time and automated. And that's probably going to reduce a lot of friction, and you can't do that without top software.
Yeah.
Is Palantir the software they use? It could be. Does that mean more money from the government? Maybe. It really could. I mean, this is a story that could just keep going up.
I agree. Thank you, Dragos, for the 50 gifted, guys. I really, really appreciate it. You guys do not have to do this, but thank you. 70 of you guys just became channel members and support the show. Again, this show does not monetize in any way outside of YouTube ads. There's no sponsors, no Discord or nothing. So if you join the channel, $5 a month, you get to support it. If not, just very grateful that you guys join and watch every day. So thank you all for being here. And thank you, Dragos, for the 50 gifted. Okay, so we talked about Palantir. I think you'll be on Palantir Weekly tonight if you can make it. If not, we'll be live, guys, 11 p.m. tonight to talk more about it. Let's talk about Tesla. Because Tesla just got...
Amazon? How about Amazon? We can do both.
Okay, so let's start off with Tesla. We'll get Amazon in there. You can make some comparisons, but I really want to get your thoughts on this. They added $100 billion today, or I think $92 billion in market cap. It's up 30% now year to date. This was the laggiest of the laggiest Max 7s. Elon's worth $300 billion, and this is clearly the biggest beneficiary of Trump. What are your thoughts on Tesla?
That once again, valuation doesn't make sense. I mean, how much money does Tesla make in free cash flow? And I hate coming back to that, but when you really look at the valuations, Tesla's PE is what now? 250, 300?
No. Relax. Those are Palantir numbers, bro. Those are don't. That's not Tesla.
Okay.
Tesla's PE is 141. 141.
Okay.
You know, let Palantir have the high PEs. Okay, we beat everyone on the PE. Don't worry about that.
You can't win at everything, but I mean, look, Tesla went up the market cap of Salesforce, and they didn't add another single dollar to anything. Like, no earnings report came out. Think about the amount of market cap that actually is. You're adding the market cap of entire companies in a couple of days on just Trump getting in office. That's the only reason it's up.
Okay, so here's the question. Is Trump the Trump card? That was good. Is Trump the Trump card for Tesla?
It definitely doesn't hurt.
Because again, I told you,
Trump is a big Detroit guy. He wants Ford to succeed. He wants GM to succeed. He wants the auto manufacturing to exceed. That is not saying that it is bearish for Tesla. I think it's definitely bullish for Tesla because it may help with getting FSD forward, actually. And that could be a huge bull case for Tesla because now Elon's got his hooks in the government everywhere. So that could actually advance FSD and robo-taxis by quite a bit.
Well, that's my thing. Elon gives a little phone call to Donnie. He says, hey, bro, I got you elected, probably got you out of all those stupid cases that they wanted to charge you with. And now that you're president, they're not going to prosecute you.
I think that's what people are banking on right now.
I mean, Bank of America, I said this in the morning on the show, Bank of America upgraded Tesla from 265 to 350. And if you read the report, 95% of the report is Trump, 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 Trump. They're not even talking about robo-taxis. So I find it hard to be bearish on Tesla. But here's the question, Steve. Do you think we pulled forward a lot of growth in 2 days for this stock?
Yeah, you went up by the entire market cap of Salesforce in 2 days.
That's pretty epic, bro. But like, see, Tesla deserves it, dude. It's like, it's one of the most amazing companies on the planet. If that money was going to go somewhere, it should be going to the Teslas.
Yeah, but define amazing. Amazing in what? Amazing in theory, amazing in what the future could look like.
I just bought a Tesla. And I just bought a Tesla, and after the market opened, I went on a 10-minute drive just because I wanted to drive it, dude. It was the most amazing experience ever. I feel like I'm driving a spaceship. Seriously.
I get that. But once again, what's Meta's market cap right now?
Look, Meta's had a good year. It's not about comparing Meta.
What's its market cap?
Meta's market cap is 1.5, yeah.
Okay. How much free cash flow have they generated versus Tesla? 9, 10
I get
times?
it. But does Meta have something that could be a $25 trillion business like robotics? You know what I'm saying? Like, I get we're pulling that forward, but off potential alone, I can't imagine.
Off potential alone, Tesla's got the most potential out of anybody. The question is, do they monetize it? Probably, but they haven't yet.
No, I agree. And I don't know, dude. With Trump in office, it just doesn't seem like the bears on Tesla.
It seems like a market that's not going to stop.
It really does, bro. Because, okay, so let's explore, before we get into Amazon, let's explore recession arguments. Like,
yeah, good luck with that.
Like, what exactly could get us to the point where people lose their jobs, they can't afford basic things, earnings go down? I don't know. Number one, you got
Black Swan event. Obviously, you always have to say that.
Black Swan event, yeah. Black Swan event. That's true. But also rate cuts, right? Oh, Steve, I think you're there. You're back?
No, I'm here. The other thing is, depending on how quickly the advancements in AI are.
Well, so that's true.
Let me jump on in 5 minutes when I get upstairs. You're losing.
Okay, you're already home? Okay, perfect. I'm sending you the link. Okay, perfect.
Yeah, I'll jump on in 5 minutes if I'm upstairs.
Okay, you have the link. I emailed you already. Okay, cool. All right, cool. So on that conversation, dude, I think that's an important point. So I look, the ability for us to get into a recession obviously is possible because anything can happen. But as rates come down, it begs the question: how do businesses have less liquidity and capital to actually be able to, not pay their employees and then have to fire people, yada yada? With rates coming down, that just doesn't seem as likely. Which means, I don't know. There is a hell of an argument for why the recession argument that bears have been talking about, now that rates are like, if it was supposed to be a recession, it was supposed to be when rates were 5% and no one can afford anything. But Jay Powell navigated that, which is why he might go down as the greatest Fed chair. I don't know if now as rates come down, that recession needs to happen at any high level. We got another 50 gifted, I think, by Dragos, thank you again, dude. You really don't have to keep sending these, but thank you. I think 120 of you now have become members of the channel due to Derek and Dragos today. So thank you, Dragos, for another 50 gifted. Yeah, pretty much everyone is going to become a channel member at this point. I think that's incredible. Another super chat right here we have from Christian. Tariffs causes high inflation. 10 years way too high. Tax cuts and spending way out of control still. Well, the 10-year actually started to normalize a little bit. It was down today. Remember, it was almost at 4.5 the night of the election on the futures. Today it's at 4.3. Yes, it's still high, but if the market, perceptually thought tariffs would create inflation when Trump got elected, and now they're kind of like, we don't really know if it's really going to create inflation, we might see that 10-year normalize. And maybe if it's stuck at 4%, 4.1, 4.2 over the next couple of years, that's not the worst thing in the world. That could be an argument for why that 10-year being so high is not as big of a deal. Ashok says, why do I never get free memberships? Dude, honestly, I don't know YouTube's algo on this. I think it's like you got to comment in the chat a lot, and then it just randomly picks people, but it picks people based on their engagement, I think. So I'm not sure who gets a membership, but if you get one, then You get one based on YouTube's algo. Card thinks, why does the algo hate me? Yeah, a bunch of you guys comment in the chat all the time, so I don't know how it determines it, but it determines it somehow. Trap says I get overlooked every day. I'm sorry, dude. There's a bunch of you here. The algo makes their decisions. Achieve says best community on YouTube. Achieve, thank you for being here as well. This has been a hell of a week. So, okay, as we wait for Steve to come back, let's look at some other things on how the market did. That picture I was showing on screen just now, the S&P 500, look at this weekly map of this bad boy. S&P was up 5%, Qs were up 6%, Dow was up 4.6%, IWM was up 9%. So for everyone waiting in that small cap trade, the small caps are finally playing out. And then, there's some pockets of red, but the majority of the S&P 500, I don't see Palantir's ticker, but it's probably somewhere in these. Oh, there it is. Look at that. Look at Palantir just chilling right there. Palantir, 40% up. It's incredible, dude. Absolutely amazing right here. Over the past 5 days, Palantir was up 42%, bro. So Palantir's right there, but it's been a hell of a week, and a lot of the big tech stocks ended up getting a ton of that green. So there you go. It's been pretty incredible. Amit's lying. He actually handpicks the memberships. Imagine, bro, if YouTube gives me a thing to pick 50 people really quickly. I don't even know how I would manage that if I would have to do that. How are you guys thinking about Steve's article about this whole Palantir's overvalued thing? I mean, look, all of us can objectively agree without sounding bearish on Palantir, because I don't think any of us are bearish, that this thing is priced, forget to perfection. This shit, what's better than perfection, bro? I don't know what's better than perfection, but whatever it's priced to, it is priced to. Then you watch the Carp video today. Okay, Carp had a new video that was out today. We'll probably watch it on Palantir Weekly tonight, but we watched them in the market open. And Carp's over here basically interviewing these interns at the company. And the way he's, all right, I'm going to be glazing a little bit here, but the way he was charismatic, the way he was asking these kids questions, he genuinely was curious. He was taking their vocabulary and their metaphors and applying it to his answers. Like, he's just a special unicorn CEO that you don't get. Now, is that worth 130 billion? I don't know, but the market says it is. And it's one of those things where either, again, I keep saying this, either we're super euphoric on Palantir and we're going to get humbled, which might be okay because all of us probably want more shares, or it's one of the greatest stories that's just beginning. And that story has a long runway. I mean, I talked to a bunch of Palantir employees. I'm very close with Chad and Ileana. Dude, they're just getting started. Like Chad, the excitement he has every day in terms of the work he's doing and the deals that they're trying to close and the business that they're doing, like they are really trying to go for it. I have a friend, Mateo, he was at the first original boot camp. And I think he was at boot camps a month ago. They're working, bro. They're really fucking working. And he's in the NYC offices for Palantir. And if the entire company and when I went to AIPCon, when I talked to all these employees, if they still feel like this is the greatest company in the world to work for, they're not leaving. The churn rate is insignificant on Palantir because everyone loves to stay there. And now they're incentivized to stay there because the stock is going up so much. So they're only going to work harder. You would imagine that the entire culture of the company is ready to keep moving forward. Does that still justify 130 billion? I don't know. And a lot of people could say probably not. But the market is giving it to them, which is what matters. Humble to what price? I would say humbling is 30 at this point. When it was 45, I said 25 is humbling. I think 30 would be humbling, going down from, at this point, almost 60. Where are we after hours right now on Palantir? 58.50. Yeah, we're up after hours, dude. 58.55. We're up another 1/3% after hours. Like, I don't know what to say. It's incredible. AI Money, thank you for the $5 super chat. Rexy Roller, thank you for the Canadian 50 Dolores. Appreciate that. Rexy Roller is a hell of a name. I like that. Rexy Roller. That's awesome. Thank you, Rexy, for the $50 super chat. Really, 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 really appreciate that. And you sent another $5 super chat. So for 55, thank you, Rexy, for the 55. Oh, I get it. Palantir, $55. I get it. Thank you, Rexy. That is awesome. Appreciate it. For those asking about CleanSpark, again, it's still halted, but the halt was a clerical technical error in their purchases of the warrants underlying the stock. So it's a nothing burger, not a big deal. Company already came out. They said it's fine. It should be unhalted by Monday. And so if you're in CleanSpark, don't worry about it. You should be okay based on it getting halted yesterday. Ray, thank you for being a channel member. Happy birthday, bud. Can we get a live stream reaction of yours and your parents to an FSD drive? I want to see it blow their minds. Mayo forever. You know, it's funny. I did get a Tesla that is the same color as Mayo, but I have to get the FSD trial. Yeah, eventually I'll do the live stream eventually with Tesla, but this is the car right here. I'll post an actual photo on Twitter tomorrow. I haven't posted it yet, but it is beautiful, guys. It is. I just felt amazing in that car. I can't even describe the feeling, dude. Like, I don't know how to describe like driving this car. It is like I don't need to go drive around. I force myself to go drive for 10 minutes to like just go do something because like I just like A, I was sitting down for 4 hours on the market open, so I need to get it out of the house. But B, I was like, I need to drive this thing again. Like, it is just the most enjoyable experience ever. And I get it. I get it why people love Teslas. Does that mean it's worth $1 trillion? Doesn't have to be, but does the potential of this company in terms of their execution on making cars transcend to FSD and robotics? Probably. And as a result of that, you can see some more momentum with Tesla. Sort of like driving a rocket, literally, dude. Like it just, and then I put my phone in, the Bluetooth was connected, the heat was on. It was just like, wow, coming from a Honda Civic, the Bluetooth wouldn't connect. I'd be fighting with it to connect the Bluetooth. It was just amazing. It was just absolutely amazing. I was on the phone with Steve, like hands-free, just being able to talk to him in that Tesla, and it was incredible. All right, he's back.
I don't know how you fight Bluetooth. It can't hit you back.
Dude, my Honda Civic, it was bad, bro. It wouldn't connect to the Bluetooth. Like, are you wearing a Patagonia vest, bro? You're wearing one of those rich people vests.
No, so I keep one on the back of my door in case I go outside because it's just not warm enough to wear a jacket yet, or not cold enough to wear a jacket yet. So,
okay, it feels like the rich people vest, but it is what it is. We get it. It was a good week for you in the market. We get it. I understand.
You know what? It's not cold enough for a jacket yet. What do you want me to tell you?
That's fair. Okay,
so if you start wearing a jacket now, what do you do in January and February?
That is fair. And you know, it's actually been kind of warm in Jersey in November. I'm not gonna lie. It's been
just saying. But the second part to what could create a bear market is the advancements in technology and job loss.
Expand on that. What do you mean? What do you mean?
Well, if you advance technology so much without any safeguards for companies not getting rid of people, if people don't have jobs, you're going to have an even bigger wealth gap, and it's going to create a very serious problem. So you need to be very careful about that also.
Yeah. So, and what was the first part that could create like a black swan crazy event, right? That was
black swan. I mean, look what happened with the pandemic.
Yeah. Yeah.
So you never know. You could have a natural disaster. You could have a volcano erupt in the middle of freaking the U.S. And, you know, there's black swan events you can't plan on.
All right. So we talked Palantir, we talked Tesla, we talked kind of broader market in terms of what's going on. One company that you wrote another article about that I'm going to link in the chat here that you're really pounding the horn on, and you have been for a while.
I have been for a long time.
See, you want your credit here. You're like,
no, it's not about
I'm going to get my credit on this one.
Saying, this is the one company that I will fight with every professional analyst on because they've gotten it wrong. After every quarter, when Amazon sold off, I mean, I put in writing many times that for somebody to think that they know better than the company with forward guidance is crazy. So it's insane. And look at last quarter. I said on that dip, I called it at the very bottom of the dip last quarter that this is ridiculous.
You did. You called me that day, 161 or 170, whatever it was. You were like,
go to the article that I wrote because the chart is in there it's like the second chart.
Okay, let me pull this up.
Because I don't like saying things without proof.
One sec. Signing in right now. Yeah, and you know, now that the Bezos wall has kind of been broken to an extent, you know, one could argue that there is even more momentum coming into Amazon as well.
I think there's going to be a lot of momentum coming in. A lot.
Yeah, okay, let me pull this up. Damn it, dude. Seeking Alpha is being annoying right here.
I can share it if you want.
Let's see if I can open it up here. Do I have it here? Let's see. Yeah, can you share it? That'd be better.
Hold on.
Maybe I can do this. Let's see if this one works. Actually, do I have it? Do I have it? No, I don't know. Yes, it's doing stupid two-step verification. Dude, I hate two-step verification, but not going to lie, it saved my life one time. Not literally my life, but it definitely definitely helped. Confirm if it's you trying to sign in. Yes. Yes, it's me.
I'm surprised you don't stay signed in.
I mean, on some of these, I don't. Okay, no, I still don't have it. Yeah, send it to me. This is being dumb.
Just let me
Wait,
share
no, I got it. Okay, cool.
All right. So
Oh, you're already sharing it.
Oh, you said you have it, so go.
Okay, here it is. So the chart we're looking.
No, whoa, go up. So that one in the green. I want you to look at where that. So scroll down a little. Next one. Yep. One more chart down right there. Look at that dot. Look exactly where I said that these people are crazy. Right there.
The dot shows when you publish the article?
Yes.
Yes. Okay, so why are people taking Amazon above 200? What is the reason it exploded up?
Oh, this is going to go well past it. And I mean well past it. So if you go down, you bring up that grid of 4 charts that I put together. It shows you your North American segment, your international, your AWS, and total net sales. North American is growing at a quicker rate than it has been. AWS is still a profit center, and anybody who wants AWS spun out, please sell your shares and don't invest in Amazon.
Wait, why? If you want AWS spun out, why should you sell Amazon?
Because it's a ridiculous idea. Because one, Amazon is utilizing AWS for its web services. You don't want to pay a separate company. You want it to be embedded. That's one. Two, you want all the synergies that they recognize in AI and generative AI and machine learning to impact their e-commerce business in real time. You do not want that as a separate company. And it's the biggest profit driver of the company with the best margins. Like, you do not want that as a separate company. So anybody who wants it, please sell your shares. I'll buy some of them. Sell them, please. And then you get down to their operating cash flow is crazy right now because they're operating at 10.9% margin. This is the best margin that they've been operating at.
Well, this is what made me really happy. Seeing 11% operating income margin was like, I mean, since 2020, they haven't done that.
You have a combination of inflation going down, oil prices going down, and input costs going down. Operating expenses are going down, and they're probably going to continue to go down. So this is going to expand. Now, here's what people are, I think, overlooking. Amazon is spending about $64 billion in CapEx right now on a trailing 12-month basis. We know they're going to spend more next year because 2025 is going to be a big year of CapEx spending. But at some point, Amazon is going to be on maintenance mode because they're not going to be building new data centers and all this stuff.
Yeah. CapEx will go down. Yeah.
If they drop it down to 50 billion, they are still outspending every other company in CapEx. And you add 14 billion in free cash flow immediately by flipping the switch.
So is it what's going to 10 trillion? Like, what is your Super Bowl case? Give us the real pitch for Amazon.
The Super Bowl case is that Amazon is going to be the first $1 trillion revenue company. It's not going to be Walmart. It's going to be Amazon. Okay. If you get to a 15% free cash flow margin, that's $150 billion of free cash flow on a trailing 12-month basis or forward 12-month basis, which is at this point would be the most free cash flow any company generates in a year. So at that point, you have to make a case for Amazon being at least a $4 or $5 trillion company, which is at least a 2 to 3x from there.
So, I mean, I think Palantir should buy Amazon out before they get that big.
I mean, look, the way Palantir's going, they probably could. Issue some shares, Carl.
Dude, would you like get really upset if Palantir got to 10 trillion before Amazon?
No, I wouldn't get upset, but I would make a huge wager that does not happen.
But I would take the opposite of that bet, just like you bought those Kamala contracts. And if it does happen, I would go crazy.
Listen, at a couple of cents on the dollar, it was a good gamble with the payout.
No, it was not a good gamble when he won North Carolina. You were like Kamala's cheap. I'm like, it's not cheap, bro. There's like
I say gamble. Okay, I didn't say investment. I say gamble. Paying 3 cents on the dollar for something. I mean,
dude, she wasn't. It wasn't by 9 p.m. It was GG's. It was over, bro.
Look,
it was over.
I'll pay 3 cents on the dollar for a huge payout. Why not?
Okay, let me ask you this question.
Yep.
How do you feel about people that voted for Harris but are looking at their portfolios go up? How do you think they're handling the moral complexities with their financial mobility based on Trump bringing all these gains to the stock market?
I don't want to get into a political discussion.
It's not a political thing. It's just in general. Like, what do you think people are feeling? Like, you know, people.
I don't know. I'm not other people.
I have people who voted for Harris in my life, like my sister. She's looking at her portfolio. She doesn't give a fuck that Harris lost. She's really happy the stock market's up. So I'm wondering, in America, are we getting to a point where people care more about things that matter, like their money, over things that might not matter as much?
I don't know. I don't think that has anything to do with why the outcome was the outcome. Well, I don't think investment portfolios had anything to do with it in the grand scheme of things. Some people were worried about unrealized capital gains or a higher tax rate, but I don't think that's why. I don't want to get into it.
Okay, well, let's get into something that we haven't talked about for a while. You got to give me a good discussion on this one because we haven't for a while. SoFi. The only position you told me you don't have any covered calls on. You're letting it run free.
I don't have any covered calls on SoFi.
And you know what?
I don't have any. To be fair, I don't have any covered calls on Meta or Apple or Amazon either.
Okay, but you know what this tells me? For 5 weeks on the show, you wouldn't talk about SoFi because you were so pissed off when they were at 7. But you love them so much that you didn't even write a covered call.
I'm still not happy.
No, but the fact that you didn't write a covered call on them means you believe in them so much.
No, it was too low because I would have got blown out of the water. Because at that point, it's a lot different writing covered calls on Palantir when Palantir's at 30 than when SoFi's at 7 or 8. Because you could have never expected Palantir's going to 45 or 50, but you could have expected that SoFi was going to get to 10, 11, or 12 after earnings.
But my point is, you still believe SoFi would get there, right? And that's obviously why.
Well, I think it's very undervalued. I'm just very upset at a very specific business metric that they did. And
so, what do you have to say about the stock and the performance right now? Do you think Trump's bullish for them? Like, how would you characterize?
I think that the financial landscape is going to be very bullish for finance companies across the board, not just SoFi. I think that you're going to have an era where you have businesses borrowing to expand. That is bullish for financial institutions. I think the mortgages are going to come down as rates come down. And I think that this is going to open up the floodgates for student loan being or student loan originations from refinancing debt. So I think that there's going to be a lot of things happening for SoFi. And depending on how good the Technisys platform is, I think you'll start seeing them win some RFPs and maybe they get a hybrid valuation. Like there's a lot of catalysts for SoFi going forward.
Dude, the fact that Wells Fargo is up 40%, like JP Morgan's up 37%. SoFi's growing faster than all these guys, right? I know they're not as big, obviously, but you could argue, yeah, that growth is what gets the market excited.
SoFi's got a lot of catalysts behind it, but I'm still not happy that they're doing a partnership on business banking. I want that in-house. And I know my opinion doesn't matter, and I know that Noto knows better than me, and I know that those people that run the company have a vision, and I'm benefiting from it. But if you want to get to be a top 10 financial institution, you cannot do outsourced business banking. Maybe you can get there, but I haven't seen it done. Does Bank of America or Wells Fargo or Citibank or JP Morgan or Truist or any of these companies, do they outsource business banking? No, they don't. And when you have SoFi making proprietary ETFs and mutual funds, okay, business banking makes the most sense because you take 100% of the benefit of lending to those institutions. then you can come back and say, listen, we have wealth management services for your 401k plans, your 403b plans, et cetera, et cetera. Not only do you get the asset management fee for the funds, you get the smaller management fee from putting them in your S&P 500 ETF instead of the spider from State Street. So you can double dip on that. I think it is a missed mark, and I think that that would be huge for them going forward. But I mean, it's crazy that this is not a stepping stone, because not only do you get the business lending, you get the business credit cards, and you get a segue into 401k and retirement management for SoFi. And that could be huge. They could be the next Vanguard or BlackRock at that point. From maybe not BlackRock, that's the wrong one, but Vanguard, Empower, TIAA Craft. I mean, any of those institutions for retirement.
Right. Okay, so let me ask you about this. A lot of people are curious about this one. Do you have any thoughts on Walgreens at all?
I gotta look more into it. I mean, I have a little bit of it. I don't have much.
It's a $7 billion company that does $145 billion in revenue.
Yeah, but what are the financials on?
No, I know they're not profitable. I get it, but
I'll look right now. I have not looked at the financials in so long. I don't know. So hold on, let me bring it up.
Yeah, let's do a little bit of analysis. I would love to see your thoughts on it. But in general, just
God, that's an ugly fucking chart. Am I allowed to curse? Sorry,
Steve, it's my channel. I mean,
no, but I mean, I don't know if there's like
let's get rid of all the monetization for you and your curse.
No, I'm not going to do that to you.
No, I'm literally kidding. I curse all the time, every day on my show. I say,
oh, okay. Well, this is a fucking horrible chart. I mean, it's down 65%.
Hold on, Bayray, can you? No, I am not the only one that cares about Walgreens. There's like 5 people in the chat asking about Walgreens. So take your sass and your ass and get out of here. Okay, I'm just kidding, Bayray. I love you, but okay. So the financial.
You like that I'm drinking Snapple and not a nice glass of milk in it?
Oh, I'm so happy you're not. If you were drinking milk on the market close.
You know, I was thinking about going and getting a nice glass of milk before I got home. I'm like, you know what? It took me a little bit of time to get upstairs with the elevator. I'm not going to have a glass of milk right now, but maybe I'll bring it out for Palantir Weekly tonight. Maybe I'll even drink it right from the glass jug for you.
Dude,
that'll be epic.
I can't handle milk. I just can't do it.
Oh, it's so good.
No, it's not good. It's fucking milk.
Ice cold whole milk.
Okay, so Walgreens. Before we get into the numbers, the business model, like, do you like it?
Not really, but I mean, and I say that because more and more things are on Amazon, but you just can't get some things often. I don't know how the delivery of prescription drugs is really going to work. I don't know enough about Amazon Deliver and Cuban's company and all that other stuff, so I don't know.
But so okay, so let's go.
There's always a need to go to the store. I go to CVS right around the corner frequently just to pick something up, so I don't have to wait the next day to get it. I mean, there's always a need, but I think there's more of a need in larger populated areas than less dense areas, because I think you can make a case for New York City or LA or Miami where you're going to have a lot of foot traffic. But if you have a Walgreens 20 minutes away and you can order on Amazon, get it the next day, then it becomes, do you really need it or do you need it tomorrow? Whereas for me, if I can just walk downstairs and get it, there's less of a chance of me buying it from Walgreens. I mean, less chance of me buying from Amazon and Walgreens if I really want it.
The weird thing here, though, is like if I told you a company was doing the same revenue as Meta, trading at $8 billion, obviously it's a different business, but there has to be something that's valuable.
You can't look at it like that. You got to look at its profitability. I mean, their margins suck. Like 147 billion in revenue, but they do 26.5 billion gross profit. What is that, like a 16% margin?
Yeah.
You know, that's gross profit. I mean, operating income's less than $1 billion. So this is what scares me. Their cost of revenue is 121 billion. And then you add their admin expenses and everything else, it's another 25 billion. I mean, there's no juice.
Look at their free cash flow. It's just collapsed, bro. It's negative now. It is so far negative 363 millions.
I mean, that's crazy how much it's crashed. and they're still paying it. Like, why are they even still paying a dividend at this point?
Dude, they're paying a 13% divvy, baby. That's
I know they don't want to get rid of it, that it's grown for 47 years, but like, why are you still paying a dividend? I mean, they're not, so it hasn't grown that long. It got cut last year in half, and it's, oh my God, still that huge of a yield. Jesus. I don't know.
Yeah, it's a big yield. So I mean, like I was looking at the options on Walgreens a while ago, and like it's huge if it goes to $20 by like 2027.
But we've seen this story play out before. J.C. Penney, Eckerd's. We've seen this story play out.
Yeah.
Is this another one that plays out like that?
I mean, I'd hope not. Well, no, I mean, because those companies survived to an extent, right?
I mean, did they really?
Well,
Eckerd's didn't. Is J.C. Penney still in business? Maybe they are. I don't know. I know Macy's is, but Macy's is different because of the real estate that they own.
Yeah.
I mean, I don't think you can get better real estate in the city. They own an entire block for their store, and they own the air rights above it.
Okay, so we'll do some more work on Walgreens and we'll look at it. But I think I'm getting the same sentiment as I got for Celsius, and I didn't like Celsius either. And Celsius, those earnings were not
telling me I was nuts when I said pass on it.
I mean, I had some people, aka cough Bay Ray, also telling me I was nuts, and I'm like, what do you see in energy drinks?
Yeah, and how about this? I would not touch Celsius, Monster, or any of that stuff with a 10-foot pole right now, because guess what? RFK is going to go on a warpath.
That is true.
Wait.
Now, I don't know if he actually gets to dictate like the new version of FDA or whatever, but like the sentiment's not going to be friendly to these drugs.
I mean, if he helped, you got to think that without RFK, Trump doesn't get elected. You got to assume that.
That's true.
And if you assume that, you assume that Trump is going to reciprocate and do what he said he was going to do and allow RFK certain privileges. We know from everything RFK has done that he is very into the war on sugar, the war on all this stuff. There's no way energy drinks can be good for you. I mean, his whole thing is make America healthy again. I don't know that those are good places for my capital.
Yeah, and Monster CEO just came out yesterday and said that consumer spending is going down for energy drinks. So if Monster can't sell the types of numbers they want to sell for,
I mean, does this hurt Coca-Cola and Pepsi?
I agree. Also, we just got something. Bezos just filed to sell 6 million shares of Amazon.
Oh, what does he want to do now? Does he want to buy the Boston Celtics?
When did he sell this? Oh, he just sold 1.2 billion. Hold on, what's the average on this? Hold on, let me do this real quick. 1,231,381,630 divided by 599,000. He got a $206 average. Okay, and he has 10 million shares left for his scheduled sales, which at this price would be 20 billion. Right. So yeah. All right. Someone bought up that $1 billion worth of stock. So
I wonder what he's going to buy. I'll tell you what. You want a sleeper pick?
Yes.
I'll give you a sleeper pick. It's not new. I haven't really. I've never written anything about it. I don't believe. I think I discussed that somebody should acquire them. But my sleeper pick right now is Warner Brothers Discovery. That's my
okay. Hold on. So I got to give you some credit on this one. You have been talking about WBD for a while. They had a good earnings. They're profitable now. Where's the stock today? It's up 12% this week. So what's the thesis on Warner Brothers that we should care about?
My thesis has not changed, but they are in a position where content is king. They own a ton of properties from IP. They have strong gross profit margins. The expenses from the spin out are going to be done this year, I believe. And when I look at their EBITDA, so just how is that possible? That can't be right. How is their EBITDA $12 billion or $12.9 billion this quarter? That can't be right.
Yeah, I mean, look, the problem.
I
with
need to
Warner
look through
Brothers-
the earnings call. I don't know. Maybe something happened that made that explode. But this is a company that, with everything that they own, I think that they could get acquired and somebody will acquire them this year. It just doesn't make sense for all these standalone streaming services. And I think
but they're acquiring $70 billion of debt also, which is like, who wants to acquire that much debt?
Hold on, let's look at their debt.
That's always been my bearish part of Warner
Wait,
Brothers.
their debt has gone from $51 billion in June of 2022 to $37 billion.
Oh, so okay, so it's coming down. You're right.
It's coming down.
Still, $30 billion of debt is not a small amount.
Okay, but that's manageable.
Wait, hold on. Why does Warner Brothers have this much debt?
Because when it got spun out from AT&T, they loaded on some of the debt from the company into that deal. It's also the debt from Discovery when they combined. That's why. This
is so bearish compared to Netflix's business model. Like, it's just such a different. I mean, like, Netflix spends for content, but they don't have to go into this much debt for content.
Apple should buy Warner Brothers Discovery.
Apple's not buying a company with $40 billion in debt. Tim Cook will do a lot of things. He's not doing that.
Warner Brothers Discovery tomorrow.
I mean,
or Netflix should buy Warner Brothers Discovery tomorrow.
I think they just let them die out, dude. I don't think
they're not dying out. Think about it. Warner Brothers Pictures. You get that huge movie studio right there. You get HBO. You get your favorite news network, CNN.
Oh, good.
You get Discovery. You get
dude, that's already short. Warner Brothers. They own CNN. Dude, CNN's dead, TNT. Bro.
The amount of
the only reason CNN's going to survive next 5 years is because Trump's probably going to say some crazy stuff and they'll get some ratings. Outside of that, who trusts CNN or MSNBC?
Did you see the Wall Street Journal today?
What? No. What they say?
Really? I'm going to text this to you. Not even going to tell you, because I want to see your reaction. I can't believe you didn't see the Wall Street Journal. Hold on.
Okay, and guys, we'll talk about Zillow. Dylan, I see your comment. We'll talk about housing in a second as well. Real quick, Steve, do you think Pepsi could buy out Celsius?
Buy them out? Yeah, why?
But you think it could happen? That's my question.
No, I don't know. Why? I don't know if they want to. Let's see a reaction.
Okay, so you texted me a link to LinkedIn. The title is Legacy Media's Influence is on the Decline as Podcasters and News Influencers Gain Clout, leaving a fractured media environment.
And what's the caption under everybody's pictures?
Legacy Media is dead.
Yeah. No, it says Trump's win cemented it. New media is leaving the old guard behind.
Well, dude, I mean, I think it's the greatest time in human history to independently create your own content. I mean, people don't trust a corporation with talking heads that are bought and paid for that have an agenda. Like,
content is king, and I'm telling you that people are always looking for sources of entertainment. Netflix or Apple or even Amazon should take a chess piece off the board, acquire the IP, continue HBO, and just put this into their infrastructure, and it becomes a reason to upsell on the subscription price. What does Netflix cost right now?
16.
Okay. If you buy Warner Brothers Discovery and you get all that and they go to 21, is anybody really going to cancel for all the additional stuff they're getting? No.
Yeah, I feel you. Yeah, that's fair. It's just again, do people really want to watch? Like, remember CNN tried CNN Plus? It failed in 30
You're
days.
talking about a news network.
Yeah, I mean, there's other.
How much news can you watch?
I watch a decent amount of news. I just, alternative sources for my news. But I keep up with the news a lot. I think legacy media is going to struggle the next couple of years.
Keeping up with the news and watching the news are two different things.
No,
what I'm saying is the movie studio, the HBO properties, Food Network, Discovery, all those assets, TBS, TNT, there are a lot of things. They own DC Comics.
I'm not the right guy to talk. I don't care about DC or Marvel.
I'm just saying there's a lot of stuff in there that would make Netflix or Apple. Apple's the one that should buy them because their streaming service is garbage compared to Netflix, Prime, and all these other things.
No, that's a good point. Apple has zero content at all.
And that's why I'm saying you want to boost up Apple services. People gravitate toward these subscriptions because less and less people have a full, robust cable TV subscription.
Yeah, and Apple can't make original content, so they got to license or buy.
No, stuff. So why license when you can acquire all this stuff? You get Game of Thrones, Entourage, Sopranos, Oz. I mean, the list goes on. And you still have HBO produce everything.
Yeah.
It would be a good buy.
Can we talk about housing?
Sure.
So mortgage rates are still at 7.3%.
Yep.
And that's not the best.
Nope.
So first question, what gets mortgage rates to finally come down?
I mean, I thought they would have stopped dropping. Where's the 10-year at today?
It's 4.3.
Hold on.
Which should help them come down since it's down. But I mean, Zillow's up.
So the Fed needs to cut more because the Fed is still significantly above the 10-year. The Fed needs to cut more for the 10-year to drop. The 10-year is still holding strong. Nobody is lending it. For places to lend money, they have to borrow. They're either borrowing from their balance sheet or they're borrowing from the government. And when you're borrowing close to where the Fed funds rate is.
Right.
So you need that to keep coming down, especially under where we currently are in the 10-year. Because if somebody's getting a 30-year mortgage, you're not coming anywhere close to 4.3%. So you need the Fed fund rate down around 3%. Around 3%, you should see rates at 5.5%. But I think you need some more Fed cuts because the 10-year just reversed and it doesn't look like it's coming down right now.
Yeah. So, okay. So then it begs the question that when or how many rate cuts are necessary for us to get to a reasonable mortgage rate? 5%? That's reasonable.
So the dot plot says that we're going to get to around 3.5% at the end of next year and around 3%, maybe just a tick lower into 2026. I think you need the Fed funds rate to get to 3.5% at this point because at that point, there's no reason for the 10-year to be over 4.
Yeah. Yeah.
You need bond rates to come down. I mean, the bond market is really going to dictate how quickly mortgage rates come down. And the other side is if the housing market continues to be frozen, at some point, people are going to have to start lending at a cheaper rate to spur activity because they're not going to be making any money.
So Zillow, why do you think Zillow's up 70% past 6 months?
I don't follow them. I have no idea.
But
I don't even know how they make their money.
They make their money through advertising because they're a marketplace.
Well, if they make their money,
why are people on Zillow right now?
People love looking at homes. I go on Redfin like every other week.
And you just look at homes?
I look at stuff in areas I'm interested in. So
you're making that much money that you just like look at potential houses?
I mean, I always like to see what's on the market.
So Daniel says, I know multiple people that had to delist because they couldn't sell their home. Redfin CEO apologized to shareholders yesterday. So there is a legit problem in the housing market with inventory.
Yeah. Has anybody seen the price of houses?
I mean, it's up there. It's not like
the numbers don't make sense. Starter homes, at least in my area, crazy. Like people.
Well, the average price I think is $430 right now for a house,
and that's at national average.
And it's a lot higher than it was in 2020. Yeah.
Even at $430, that is a very high rate for a new couple starting out or a new family starting out. Think about what you have to save for a down payment on that. What, and 20%? I'm thinking 20% so you don't have PMI. But even at 5%, it's not easy for a lot of people to scrap together 25 grand. But you don't want PMI. You got to put down at least 100K.
So then here's the question. Does Trump unlock policies that unleash the home builders to flood the market with supply?
But That's an argument that people have tried having for a long time, but the problem is in a lot of areas. Look, you live in a pretty dense area, correct?
I live in a suburb in New Jersey.
Is there anywhere to build near you?
Oh yeah, there's actually they're building a lot near me actually.
Okay.
Right.
Yeah. Well, there's like nowhere to build near me.
Well, you're in New York. That's different. Like
I'm just saying, there's like nowhere to build, and it's very easy to say we're going to build 4 million homes, but where are you building these homes? Are you building them near infrastructure or near jobs? Are people able to commute to where they need to get to? I mean, that is a very real thing you got to discuss with it. And the income is not enough to sustain, because it's not just about being able to put down the down payment. It's about being able to actually afford the taxes, the upkeep, the electricity, the gas, and everything else that comes along with it. Housing prices have gone up so much that when housing prices go up, it makes taxes go up. I mean, the overall nut is crazy.
So Harris wanted to give everybody $25K. What do you think
That would be the worst idea, because it would create inflation in the housing market even more.
So how does Trump incentivize people to get the house?
I don't know that at this point you can, except figuring out a way to get wages up and getting house prices down. But I don't see house prices coming down.
Or if there's more growth, more businesses spending, more returns in the stock market, people can sell stocks and buy.
But you're assuming everybody is invested in the stock market. Most people are not invested in the stock market. Real wages is what you have to look at.
Yeah,
the investor class does not expand to everybody in America, especially people starting out.
Yeah. Like, well, I mean, everyone does have a 401k, technically, but you can't sell that immediately. Yeah, no, you're right.
I mean, yeah, you can borrow against it, but how many people have 401ks? Like, once again, not everybody has a 401k. And if they do, not everybody. Google, what's the median 401k amount? Now, that's going to include everybody that is retired or in their 50s and 60s.
Oh, this is not good, bro.
What's the number? 112, something like that?
No, bro. By age, it's like.
So you're 35 to 44 and you want to buy a home and you want to borrow against your 401k. Where are you getting your down payment from?
I'm going to ask ChatGPT if she has a different answer, but that's not good.
So real wages need to go up, or the housing market needs to fall. And with the melt up in the market, look, I'll give you the real answer that gets this to stop. You want the real answer?
Hold on. ChatGPT said the same thing, guys. I know some of you guys might not believe it, but it's by Vanguard. That's what was reported. Go ahead.
Don't let me lose this train of thought, because maybe BlackRock sends a hitman out to kill me. Okay.
What? Okay.
This is the real thing. You want housing prices to come down? Make it player versus player. Do not allow BlackRock to own any single family homes. Ask ChatGPT, how many single family homes does BlackRock own?
It's not a bad point.
Don't allow any real estate investment trust. Don't allow BlackRock. Don't allow any of these financial industries to own single family homes, because it is unfair for an independent individual citizen to bid against one of these corporations. You want to bid against a MIT and a MIT beats you, that's one thing. What does it say?
In May alone, they bought 37,000 homes.
Yeah, that's cool, right? You're bidding against BlackRock. Who can afford a home when you're bidding? Oh, that's Blackstone. Who can afford a home when you're bidding against Blackstone? Look at BlackRock. It's even more.
Yeah, there was a big article in the Wall Street Journal about this a long time ago.
None of these corporations should be allowed to buy single family homes. They want to buy multifamily homes, or they want to buy commercial real estate and set up REITs with that, no problem. But single family homes should be for families.
Okay, so one thing you might be wrong on here. Google's saying BlackRock doesn't own them. They own a lot of commercial properties, multifamily, but Blackstone owns a lot of them, which is the same point you're making.
I am pretty sure that BlackRock has a fund that they've been buying up single family homes on. Well, I really do believe that.
Google, your company, says they don't. They buy multifamily properties, apartments, yada, yada. But Blackstone has over 50,000 homes.
I'm pretty sure that that's incorrect, but I will look to see where I read it and I will get back to you.
Your point is valid, which is that you can't be competing against these
Take
corporations.
companies out of it. If companies don't own single family homes, it'll be better for the home market, and homes will probably cost less because they can bid it up to anywhere. They 100% do. BlackRock owns a ridiculous amount of homes. I'm telling you. Hold on.
Dude, if you search Google, you're gonna get the same result. I agree with you. I read those articles before as well. I don't know why Google's saying that. I don't know if some BlackRock people bought a ton of Google stock and they told them to not say this, but
So this is from CNBC. So I hope this is not behind a paywall. Okay, Wall Street has purchased hundreds of thousands of single-family homes since the Great Recession. Here's what that means for rental prices. And let's see if they have any numbers in this. Institutional investors may control 40% of the U.S. single-family rental homes by 2030, according to MetLife Investment Magazine. 40 freaking percent. You tell me, and the crisis they were talking about is 2008. You tell me how that makes sense for the housing market for affordability.
okay, what about this question? Thomas says, what if BlackRock developed their own houses and then just owned it themselves versus buying it? Is that better?
I think it's definitely better than them buying existing. I still don't like it, but it's definitely better because they're putting new material onto the market.
Yeah.
But for them to own 40% by 2030, institutional investors, that is crazy. That means every 4 in 10 homes that's on the market, you're bidding against a multi-billion-dollar company, not another individual. So you tell me how that makes sense for the housing market. It's great for everybody that bought houses in the 80s and 90s, but it's not good for people starting out and wanting a piece of the American dream. Like, it's a very easy fix. You just don't allow it.
No, you don't allow it, and lower rates should help. So I agree. It seems like that's the best way to solve it. Let me show you this chart. I don't know if you saw this. These are global country returns for their stock markets in 2024. Argentina, Peru, US, China, Israel at the top.
Yeah, Argentina has been a beast.
Yeah, I should have looked into that a lot more January. With Malay, he's liberalizing, But China, any thoughts on if they outperform next year?
I think they do.
You think the stimulus is enough?
I think that it's going to look. I think that China is not going to invade Taiwan. I think it's going to be business, business, business. And I think that we're going to have a strong global economy. And I think China is going to do good. We'll see. I could be wrong.
Would you buy BABA at 96?
Yeah, I don't hate that at all. I mean, I haven't sold mine.
But would you rather buy BABA at 96 or Palantir at 56?
BABA at 96.
I disagree. I'd buy Palantir. If I had to buy. Oh, by the way, I did buy at 55 because someone gave a super chat for $200 and I used that live to buy 4 shares. So I bought in the 50s. I'm part of it, baby.
Look at you. Look at you.
What do you think about Costco trading at a 57 times?
Get out of here. God, it's ridiculous.
Can we say Palantir is that overvalued if Costco is that,
I mean, how do you give Costco that valuation? You don't give it to Walmart. I mean, or you don't give it to Amazon. Like, come on. Are we really buying Costco at that valuation?
I don't know who the hell is buying. Like, I don't get it either.
Hold on. Let's get the actual number. I'm going to bring up the actual freaking number for Costco because that annoys me. I'll even build out the chart if you want to. That actually annoys
yes, let's do the chart. We got Steve mad on this one.
Oh my God. The fact that Costco is trading at freaking I'm looking at Walmart. I was like, that's not right. So Walmart trades at freaking 28 times 2026 earnings. Let's see what Costco's at. Oh my God. So Costco is at 42 times 2026 earnings. Get the freak out of here.
Yeah, that's assuming a lot. That's assuming a lot of growth.
Get out of here. That's ridiculous. And Amazon trades at freaking 26 times?
Well, so let's be rational here. Why is the market giving Costco that premium? What do you think?
People love Costco.
People love Amazon too.
This does not make sense to me.
I mean, look, if I owned Costco, I wouldn't be complaining about it. But as an objective investor, I'm not paying 57 times or 42 times.
It's insanity. It's insanity.
Costco.
And that's what gets me scared about this market is that you have things that just don't make sense. But when you look at here's the other thing. You want another bull case? The amount of money that's going to get spent on CapEx in 2025 is going to be more than 2024. And all that money is going to companies for goods and services.
Yeah.
So EPS is going to grow next year.
Service providers, IT infrastructure, energy, GPUs, the whole gambit is going to get a shit ton of money from everything. Real estate companies are going to get like building the data centers.
Like this is not a bubble. This is going to be coined. You mark my words, the great melt up. You watch. This is going to be the great melt up.
I think the cops found out that you had that idea around BlackRock.
I know, right? They're coming for me. They're coming.
All right. I think that's it for us.
Nuts.
It's been a dude. I mean, like, so this week, were you like just like when you saw your portfolio this week? Like, what was your reaction every day? Because like every day it was like it's a lot, right? It's like happening.
Look, maybe momentum. This is the new normal. Maybe this is the new normal. But we all saw how 2021 ended. The difference is 2021 had a bunch of SPACs and bullshit that went up. Like this is real companies going up. It's just where is it too much? But at the same time, where else do you put your money? And I think that that's another problem. There's nowhere else to put your money except for the stock market. And I think that that's another piece of framework that everybody needs to think about, that there is really nowhere else to put your money because not everybody is going to go buy a rental property.
Dude, I love the people that do that, but I hate the concept of everyone saying, well, just get a property, rent it out.
Horror stories that happen with it.
What do you say?
You never hear about the horror stories that happen with it.
No, I actually do because my dad did that in 10 years ago. I think he spent $400,000 on a property. Or $200,000 or whatever at the time. And like, he went through a lot of shit. People wouldn't pay, lawyers, all this shit. The pipes are bursted. Like, it's not fun, bro.
No.
Versus selling puts on Amazon at a very conservative delta, you know? It's a totally different business model, but, and you need capital to do the fucking rental property. Like you need some, to be able to handle that stuff and your time as well. Okay. So this is a good question. How long will the melt up happen? What would you think on that?
I mean, excluding a black swan event, you got to think that the great melt-up can happen for at least another year, maybe 2, maybe 3.
So hold on. 1995 went to 1999, and then it all blew up.
Blew up in 2000. But it blew up in 2000 for very specific reasons, and we don't have those reasons here.
So would you say 2023 was 1999 or 1995 or 2024 is 1995?
2023 was probably 1995.
So we got till 2027, bro.
No. But that doesn't mean that the 95 to 2000 doesn't become 2023 to freaking 2032. This could be, as much as we love Dan Ives, this could be the thing that he got wrong isn't that the party ends at 4 a.m. It's what time. And think about it.
It's that at 4 a.m. you take 5 girls home, bro, and then that party continues for a long time. This is like
that we may not have even gone to dinner yet.
Yeah, we are being so euphoric right now. It's ridiculous. Like any bear watching us right now, like this is the top. These motherfuckers at the top. Like,
but in all fairness, I've been saying that for at least 6 months that we have not even got to dinner yet.
Steve, saying we're not at dinner yet feels like it's frothy. I agree with Dan.
No, it doesn't.
Dude, yes, we at all-time highs. We definitely had dinner. Maybe we didn't have dessert. We had dinner. We had our steak.
We certainly haven't gone to the bar yet. We certainly have not.
We're not drunk yet. Until Neo is $60 again, we're not drunk. Until Neo is 60.
No, but think about the amount of CapEx that's being spent. Let me pull that up. Hold on.
Do you remember that clip on CNBC about Upstart? I gotta pull this shit up, bro. For people that haven't seen this clip, dude. Okay, you haven't seen it. No, you've seen it before. It's an old one.
No, fucking no.
This is the funniest shit ever. Yeah, this shit right here. Look at this shit, dude. So there's this guy who was like bullish Upstart. This was at the height of 2021. He had no idea what it did, and it was so funny. He tried to act like his camera was broken, and in reality, he just didn't want to answer the question.
Yes, I do remember that.
Look at this. This is when we know things are getting up there.
Putting money in right now include Upstart. That is one.
So, well, Upstart's up about 25% just in 4 days. That's a good looking
Upstart was 392 at the time, by the way.
name. Very powerful, very strong earnings. These stocks are.
What do they do?
Really
I don't even know them. What do they do?
Excuse me.
What does Upstart do?
Well, I'm sorry.
What kind of company is it?
Yeah, I'm not. You're breaking up.
Like, dude,
that guy's career was over before.
We're not in that type of market yet, bro. There's no way his camera. There's no way you couldn't hear the guy, bro. There's no way you couldn't hear the guy. Like, he obviously heard him.
So let me share this because this is going to frame a very interesting picture.
He should have been like, bro, they start things and they go up. Like, that's what I would have said. I would have been like,
so I'm on my laptop, so I can't see the stream. Can you see these numbers?
yeah, no, you're good. It's good.
Okay. So in the trailing 12 months, the Mag 7 have spent $216 billion on CapEx. And they're saying that they're going to spend more in 2025. Think about that for a minute. That money's going to companies in the market. And that's just 7 companies.
So the party's not stopping them.
You're telling me that this isn't a great melt up? These companies are spending, and this is not taking on debt. They are spending from profitability. I mean, the free cash flow is almost double what the CapEx is.
Which is why they can spend this much on CapEx.
Exactly.
That's what's special about this. Yeah.
Exactly. The cash from operations is 3x. All CapEx, they're using their cash from operations to spend on CapEx, and they still have $387 billion in free cash flow. I mean,
that's pretty incredible, bro.
They can increase CapEx by 20%. It doesn't matter.
All right. Decent. When Amit types LMAO, he doesn't even laugh. It's the sentiment of laughing, but yeah, no. So then that means go long Qs, the NASDAQ, right? That's it. I mean, that's how you play it.
I mean, I don't hate that at all. I mean, I don't think we're anywhere close to this party being over. And you don't have, these are not fake profits. These aren't companies not making a profit. I mean, this is a lot of money.
Which was 2000. Like, yes. Companies didn't make profits. That was
this doesn't have to stop. Look, you're telling me that paying 25 times or 30 times earnings is expensive. You'll never hear me say that that's expensive. You pay quality for quality. So you're telling me paying 25 or 30 times earnings for Amazon's expensive? People were paying 150 times for Amazon. Like, that's not expensive. Tell me paying 20 times Alphabet's expensive when we're paying over 100 times for Palantir?
Yeah, I mean, look, the Qs are not trading at 100 times price to earnings outside of Tesla, right? So in terms of Mag 7. So I agree. They're all pretty.
When industrial companies
priced,
like Coca-Cola, Pepsi, Walmart, when those are trading 20 to 30 times forward earnings, and you have big tech trading the same that has more growth, you cannot tell me that we're in an expensive market.
I agree. And with a Pinterest down 15% today, like, the market's rationalizing taking profits or taking capital out of companies that aren't performing and putting it into companies that are. And that's healthy. It's very healthy.
It's healthy.
And if Tesla's the beneficiary, or Nvidia's the beneficiary, or Amazon,
the great melt up could happen for at least another year, maybe more. The business environment's setting up well. It really is. Companies' margins will expand if oil stays low. If you get tax cuts with a lower Fed rate, that's a trifecta for increased margins. Increased margins mean more profitability. It means more EPS growth. It means earnings beats. Show me a bear that has actually been right more than one time for an extended period of time. Bears seem very smart once in a blue moon, but they miss out on all the gains. Think about how much you heard T-bill and chill, right? This is a great example. T-bill and chill was never a thing. And then all of a sudden it became a thing when rates got to 4%. So for every $1,000 you put in a CD, a 1-year CD, you got $40, 4%. The next year you roll it over and you get 5%. Get $50. So now for 2 years, you locked up $1,000 twice. So technically you locked up $2,000 and you generate $90. You got destroyed by the market because the rate on CDs didn't hit 4% until October 2022. And then in October 2023, they're around 5%. And that brings you to right now, October 2024, so last month. So you're telling me that generating 4% in 1 year on cash and then 5% another year in cash was a good idea? Like, somebody tell me that's a good idea, please. I mean, where are the bears? You know, I'm not bearish. I'm saying the Palantir is overvalued right now, but I'm certainly not bearish on the market. And I'm saying Palantir can keep going up, but where are the bears? Like, where's the smart bear case right now?
So, meet Kevin. He's one of like the big YouTube guys in finance. And he's been very bearish for the majority of the year.
And how's he done?
I mean, look, his I don't know his individual trades, but his ETF has not done that well. But I try to, I think people still to an extent respect his analysis to an extent because he's selling a lot of courses and all this shit and people just get so annoyed by it. But his bear case was always job loss is going to happen. And so I try to take that as the North Star and say, is that any whatever reasonable thesis outside of some crazy thing happening? And I don't know why companies in a declining rate environment would have job losses, would start laying off.
Unemployment's going down.
Yeah.
Unemployment went from 4.3 to 4.1%.
Yeah.
So he has a legitimate point for the future. A lot of things have to compound to get us there. Robotics, full self-driving, destroying the trucking industry. A lot of things have to happen for us to get to that point. But, I mean, look at that guy, Mike, whatever his name was, when you called me. The guy from Morgan Stanley.
Oh, Mike Wilson. Yeah.
So you called me and asked me we had a conversation a year or two ago about it. And I was like, yeah, I disagree 100%. I gave you all the reasons why. Like, at some point, I'm sure he was correct. But how long was he correct for? A month? 2 months? I mean, think about the carry trade. Everybody freaked out. What did I say to you with the carry trade? I said, this is going to blow over in like 3 days.
You joined the channel that day, you and Chris, and you guys said, buy the fucking dip.
Buy the dip. It was freaking a couple of day event. It did not matter. And I am not saying that people should go YOLO into stuff or that we can't go down. We can go down. I think a pullback is warranted. But long term, the market wants to go up and you're going to get a very good business environment. And there are companies that look like really good deals right now.
Dude, imagine if Trump didn't get elected, though. Like, what this week would have been like for the markets. I don't know if it would be up at all.
I don't know if it would have mattered as much as you think.
I don't think Kamala would have crashed the markets for the next couple of years. But I don't think we would see Bitcoin at 77,000.
The market may not have done what it did, but I don't think the market would have crashed. And I think it would have went up a little bit because the Republicans took the Senate and there would have been gridlock.
But would it got up to 6,000 SPX? I don't know.
No, I don't know. We'll never know. I'm just saying I don't think that the market would have went down.
Yeah.
All you needed was gridlock. No matter which way gridlock happened, all you needed was gridlock.
Yeah. All right, Steve, let's end on this. Does Steve have a YouTube channel?
No.
But
I have Seeking Alpha.
You told me you want to start a YouTube channel. So when are you starting?
I don't know if I'm going to do it. We'll see.
I think a lot of people
would. But it's not what Amit does. If I do a YouTube channel, I would be putting a set number of capital together, and I would be building a business live on YouTube in the sports and TCG card market.
People would want to watch it. There's be people that are.
And I don't know that people would really want to watch, and I don't know if it's really worth my time to do it.
It would be a passion project, obviously.
Yeah, it would be a passion project where I would do live breaks and I would send stuff out for grading, and I would probably vlog it, card shows and all that stuff. And
Yeah, I would watch it. Let's end on Intel, because this one, Trump is bullish for them. You've bought the dip on this one, right?
People said I was out of my mind with this. Intel's dead. Intel's dead. Intel's dead.
You've got a decent amount of winners. I'm not going to lie. Got a decent
thanks.
You texted me at $18. I don't know how much you bought, but you said you wanted to buy a lot of it.
I mean, listen, you got to look at this realistically. You either believe Intel is going away or it's not going away. And to answer that question, you have to understand the x86 chip market. And people aren't doing their due diligence. People are looking at, this is due diligence that some people do. ARM Holdings is up, Intel is dead.
Yeah, you're right.
I mean, that's the level of due diligence. Like, tell me, like, you go to microcenter.com or you go to any big computer retailer and you look at how many computers are being sold with ARM chips versus AMD and Intel, it's not a comparison. Like, ARM is not taking over x86. It's just not. And the only product I see out there for servers, laptops, and computers is x86 chips. And Intel has a stranglehold on the server market. They have a stranglehold on the laptop market. And AMD has closed the gap on desktop market. You have two huge upgrade cycles coming in. You got Windows 10 being sunset October 2025, and you have AI chips. And then you have the infrastructure with the fabs. And even though that loses money, at some point it's not going to lose money, and that will be a money-making machine.
And Trump wants chips in the States.
Who doesn't want chips in the States?
I agree.
Lead times go down, shipping costs go down. Probably the cost of computers goes down because you no longer have any of those costs. And from a national security standpoint, it makes all the sense in the world to have those chips stateside instead of being made in Taiwan. So
I was talking to a friend who works at Anduril, and he said the United States government needs to put $1 trillion into Intel to make chips in the United States. He was being hyperbolic, but his point was, how the hell have we not actually invested in chip infrastructure in the US in a meaningful way, not by the CHIPS Act, but like a real serious investment, Yeah.
I mean, look, AMD is the only competitor to Intel in actual chip infrastructure. And I'm not talking about GPUs. I'm talking about server, desktop, and laptop. They're the only other competitor. Qualcomm is not a competitor. That's why they wanted to buy Intel. Qualcomm is on the mobile side. I mean, Intel is going to be just fine. I think that they are going. Intel is losing market share, and they do not just live. So, all right, you got to let me pull something up now since somebody's calling me up, and I'm actually reading the chat. That's not smart, I can tell you that. Like, do people not think I do research or something? Like, really?
You do a lot of research. I take your.
Like, I probably do more research than most people that. Whatever.
No, you do. I mean, you.
This is what I do at night. Like, this is all I freaking do at night is read this stuff. Hold on. Oh, where's the fucking AMD versus Intel market share? Here we go. All right, let me share. Present. Share. All right.
Oh, wow.
So Intel's not doing well. Okay. They still have over 60% of the chip market when you include everything.
Yeah.
So desktop market share, AMD did close the gap. Intel lost a good margin, but they are starting very slowly to bridge it away again. They're still at roughly 55% of desktops. Laptops, it's not even close. Like, that's not even close. They have 70% of the laptop market. Now, AMD has increased their percentage point, but I'm sorry. ARM and these other companies are not competitors to either one of these. And then server, get out of here. It is not even close. And guess what you need with all these GPUs? You need servers, not CPUs. You need servers, and Intel is dominant in that aspect. So please do not tell me that Intel is not selling chips. They may not be making the profits that they made, but they are still outdoing AMD on every front.
Okay, last question, then we got to get out of here. We've been in for 2 hours. Thank you, everybody, for being here. Steve, thank you for being on for 2 hours as well. NVIDIA, you've been pounding the horn since 100.
Yep.
And you know, people would say it's easy. It was easy to buy NVIDIA at 100, 110, whatever. But there was a lot of discussion around.
But did they actually buy it?
Exactly, that's the thing. I didn't.
And did they actually change their mind on it? Because I was saying that it wasn't it was overvalued for a while, and then after more quarters came out, I changed my investment thesis and said, you know what? I think it's now a buy, and I put my money where my mouth was.
Guys, did I say pounding the horn? Did I actually say that? That's how you know I've been talking for 6 hours today. All right, so what do you expect going into earnings November? You think they're going to crush it?
Yeah, I mean, I don't think there's any way they don't crush, and I think their forward guidance is going to be crazy.
Do you think 147 is good to buy?
I mean, I rolled my options to 150, so I mean, I don't know.
Oh, you had options on them. Okay.
I mean, I've sold options against my position, but I mean, if I have to roll it, I'm expecting to have to roll again. The problem here is NVIDIA is such a large market cap company that every $10 of share price that goes up is such a ridiculous amount of market cap that how can this go up another 50 or 60 bucks? I don't know. But the guidance that they could potentially give with Blackwell for next year and what we saw with CapEx, could this go to 225? Maybe.
And if NVIDIA does go up, whether it's justified or not, I think Palantir is going to get some love with it. So, I mean,
look, if NVIDIA doesn't crush it, this is going to like 110. But I don't see a scenario with that happening. Because we already got the numbers from all the big tech companies.
Yeah.
We've already got the CapEx numbers.
TSM also had their highest sales ever in October.
Exactly. Like, where's the scenario that NVIDIA does not crush?
Yeah, and Jensen can't go on every podcast. He just did another one yesterday and say Blackwell demand is crazy without delivering crazy demand. And I think he's seeing it with all these hyperscalers buying it. So 34 billion maybe we get this quarter. I mean, like, it's... I
mean, I think the real question at this point for NVIDIA is it a sell the news event because everybody expects it to destroy? Do they destroy by enough? I mean, that's really the bear case at this point for NVIDIA.
Yeah.
Because I don't see how they have a bad quarter because we know that they're just they can't produce enough chips.
Yeah.
So I don't know. I mean, I think it goes up, but who knows? I don't know. We'll see.
You doing anything over the weekend?
Writing articles.
That's it? Nothing else?
Yeah, I'm a nerd. What can I say? Doing research on Intel because I guess I don't know anything about the company.
Dude, one comment you will absolutely
don't set me off.
I love it. If you want to be on Palantir Weekly tonight, you've been talking for 2 hours. I don't know.
Yeah, I'm coming on tonight.
Okay, so you're coming on.
And here's the crazy thing: I haven't had coffee in 6 weeks.
Yeah, I am very proud of you for that, dude. That takes a lot of courage, given how addicted you were to it before.
No coffee for 6 weeks, and my mind is still going like this.
So you drink Snapples all day now? That's what you drink?
No, I just wanted a freaking Snapple.
So you drink water? Like, what's your drink of choice now?
Water and decaf tea.
It's good, man.
Yeah, I went to get Lotto, and I was thirsty, and I didn't have time to go back upstairs to the office, so I just grabbed a Snapple. It was there.
Oh, that's good. You've drank coffee for many years of your life, so
I am gonna have an ice cold glass of milk tonight, though, on Palantir Weekly.
Dude, I don't get. Does anyone drink milk? Does anyone
Milk
in the
is
chat? Put in the
great.
chat if you drink an ice cold glass of milk randomly. Like, does anyone do that?
Yes, it's delicious.
And we're talking about white milk. We're not talking about chocolate or
milk. Whole milk.
Whole milk. Like, we're talking about regular milk, not chocolate, not strawberry, just milk.
I need that protein and calcium.
Dude, you know that's a myth. That's propaganda about calcium coming from milk. That's not real. At least that's some of the stories I've read. Like,
I
it's
think
not
you're listening to propaganda.
like people have said milk is actually very unhealthy for you, not healthy.
Probably is.
I mean,
It probably does.
yeah, I'm not a drinking milk type of guy.
These
But-
comments are crazy.
Dude, my chat's the best chat on YouTube. I don't care, bro. Like every day, it is like a blast in the chat. Every day, it's fun.
Amit, do you want to build a trading card business with me?
No, I have no interest in building a trading card business.
Have you looked at what the trading card market's like right now?
No,
It's
'Cause-
insane.
I mean, I would imagine if stocks are pumping, people have some more money to put into Pokemon.
Let me tell you, I bought a box of Evolving Skies at $430. Okay. I think some people thought I was nuts when I did it 7 months ago or 8 months ago. Yeah, around there. Yeah, around there. I saw it selling at a convention I went to the other weekend for $830.
Wow, that's a double. Quick
Yeah, on cardboard.
on cardboard.
On cardboard. Like we card market is very interesting. People are going to these shows with so much money. Like, and I don't understand. I look at very specific things. Like, do these people have security with them? Are they in a group? Are they with a bunch of people that look like they can fight or not? People are pulling out stacks, 50 grand, 100 grand in cash doing deals and videotaping it and putting it on YouTube. And I'm like, how are these people not getting robbed? How are they not getting followed to their hotel, wherever the hell they are going? Like, what is going on here? Like, in what world do you carry that type of cash around unless you're going to the casino?
But are you actively buying trading cards right now?
I'm actively buying trading cards, yes.
Okay, so you're into it right now. You think it's actually worth putting capital in?
Well, I'm buying stuff for my personal collection. I'm buying stuff that I'm holding that I'm looking to flip down the road. And look, Pokemon Steel product, the numbers don't lie, has outpaced the S&P 500.
No, you showed us that chart 2 months ago.
Over a 3 to 5 year period. So I have a bunch of sealed wax in a storage unit off-site that I keep. And I buy from a specific place, drop it off my storage unit, keep it there. At Magic the Gathering, the collector boxes do well. I'm sure Zach knows who Rudy is. Rudy is the godfather of this stuff. I mean, if you listen to him, very interesting stuff. But yeah, 90s are not great. Early 80s are okay. I mean, that was the junk wax era, but
I still think that idea I had of starting a trading card business on CEOs and investors and entrepreneurs, maybe like the Warren Buffett OG trading card. I mean, that's worth something. That's worth something, right?
I don't think so.
I mean, if you, I know it's not as emotional as baseball.
Ruben is trying to do celebrity stuff also. Like
No, so the Kim Kardashian, that's not going to work. There needs to be the emotional connection with the card.
The trading card market is freaking crazy right now. There's a lot of money being pumped into it. And for at least TCG, sealed product is very interesting right now. So, yeah, I mean, look, I would be interested in potentially building a business out of it. It's just, I don't know if I want to dedicate 20, 30 hours a week to it because I'd have to do 3 or 4 streams a week. I'd have to get product. I'd have to rip on stream. I mean, this one of the guys I know that I become friends with, you'll find this interesting. His last stream lasted for, I think, 5.5 or 6.5 hours of him just opening wax packs for people who are buying them off his website.
Steve,
So
I have a friend who quit his job at Bloomberg to stream on an app called Whatnot.
Yeah, Whatnot's huge.
Dude, he streams for 10 hours a day. He's making a lot of money. He's selling Pokemon cards.
Yeah. Whatnot is huge. So, yeah, one of my buddies, Nostalgianomics, he's got a huge YouTube channel for Pokemon. Not huge, but he's got a pretty big YouTube channel for the Pokemon space. And he has a website. And all these people, instead of going to the store and buying cards themselves, They'll buy them through him. He'll open them live on the stream and then mail them to them.
Yeah, it's
wild.
Chris just had to call him, so let's call Chris.
Oh, God.
Let's see what Mr. Patel says. Yo.
What up?
What's up? You're on the show with Steve.
I'm watching you and Steve live, man. Me and the wife are driving to Savannah.
My brother rips Pokemon cards and makes a lot of money too.
See, what I'm telling you that this is real.
Yeah.
I guess there's a big market for it, bro.
Chris, how about you stake me and I'll run the business?
How much do you need?
We'll talk offline.
Bro, Chris has some nice carnival contracts. He can offload a little bit to give you some seed money, so he's good.
No, like in all seriousness,
I'm letting my cruise lines ride, man. I still remember the first time I brought up the cruise lines. Everyone gave me so much shit. They're like, "Wait, cruise lines? That's dumb." And I'm like, "Bro, the option contract on those things are cheap as dirt. Like right now is the time to get it." I mean, you did this. You did the same thing with Robinhood. All of us in the quote unquote Palantir community, because technically I still have one share, so I am a Palantir.
You're always in the community, bro. Always.
Yeah. We all fucking made it, bro. The last 2 years, we all got rich. Can you freaking believe that shit? All of us.
Well, now Steve wants to make us, dude. Steve, I think me and Chris can seed your business if you're serious about it, dude. Chris, you would seed it with me, right?
These people don't think I'm serious in your chat.
Chris just said if you need like 50 grand, I think Chris and I could put 25 grand in and just boom. Like,
well,
yeah, we can do it.
I mean, I'm just saying that I think that there is a real market for this, and the business model would be we put together a Patreon. We got to put together enough money to be able to get distribution. We have people paying us upfront for the right to buy from us at a price that's under the MSRP, and we build a content channel around it. We rip.
Dude, Chris. He's really thought of this shit. He's really.
Listen, this is what I do.
I don't mind putting some money towards it. All right, if that's your dream, as friends, that's what you're supposed to do. You're supposed to support your friends' dreams. Not to mention, because of you, I got SL Green, and SL Green made me like over six figures. So I'm your boy all day, every day.
I feel like there's a different one that made you way more money, though.
Say that again.
I feel like there's another one that made you way more money than SL Green.
Bro, there's a ton of them that I've made money on this year. Like this year has been my freaking like Jordan year, man.
Bro,
everybody thought Chris and I were crazy when we went hard on Verizon. Everybody thought we were crazy.
Yes, Verizon is another one. That's oh my god, like.
Bro, Chris, what is your reaction? S&P is 6,000. What was your take on it today? Just seeing everything.
Yo, I don't know, man. The Trump trade is working. Santa Claus rally is in full effect. I mean, look, I'll be honest, guys. Because of the way that I am and the nature that I have, I did take a little bit of profits from some of my other positions, like NEXT. So I took a little bit of profit on that because I was up almost like 60% on some of my positions on that. So instead, what I did is I just trimmed a little bit, put it in some cash. I tried to buy some more preferred equity and some real estate stuff that I have because my goal, remember, I told you guys, like Ryan and Steve knows because he's a dividend guy. You always want to take some money off the top, put it into some fixed income stuff so that this way, in the future, your bankroll is going to keep growing, you know? So right now, me and the wife, I was just talking to her, like, we've got almost $250,000 passive without doing anything. So if you can get your portfolio size to something like that, it's on another level of protection too. And that's something that, and I'm hoping that Steve, me and you can kind of convince Amit, instead of just going into these deep spreads, to put some money towards fixed income so that in the future he's just getting.
Dude, Steve's been telling me to buy like a share.
I can't even get him to buy an S&P index fund. Forget fixed income.
I haven't done it. It's because it's either 500 on the S&P or 10 shares of Palantir. It's one or the other that I've got to do next year. And we got to see what it's like.
It's up to you, man. I say look for some preferred equity and buy some fixed income, dude.
Yeah.
You never go wrong with getting cash flow. Okay, cash flow coming in is awesome. Even in a down market, that cash flow is going to float you. It's going to let you do whatever you want with your life. You
No,
know,
this is
you wanna
real,
buy a
dude.
house-
The dream is making money off your money in a way that doesn't make you like scared at night. And that's what
Yeah.
preferred equities tend to help, and fixed income tends to help do. So,
I was talking to Adam about this, right? Because Adam's doing really well too. So I was like, Adam, there's tons of companies right now that have great return, great portfolios of things. Because like once you've made it, the goal isn't to risk anymore. It's to basically just let your money chill and give you that good life that you can't, look, all of us have to acknowledge one thing. We took some freaking hard risks over the last couple of years. We deserve all the wins we got because we literally powered through a lot of the risk. But once you're at a certain level, it's time to take the risk off the table and enjoy and basically live a good life. And then that gives you the power to be more speculative later on in life. Like, you know what it is? It's like someone said. It's like you gotta fight something from a position of FU, right?
Yeah.
Where some people say, well, you should just buy and hold all the time. Like, yeah, but I need to eat. So if you can have a portfolio that's just giving you the money to survive and eat and have a great life, dude, the rest of the money you can put in some speculative shit like what's his name? Like Derek. Derek's like super loaded because he's got all of his main portfolio money that he's ever going to need in his life probably ready to go. Like he's never going to have to worry about money again,
Yeah.
So we have to get to that level, and I guess that level is different for everyone. So.
All right. Why are you going to Savannah? You going for a little vacation or something?
Yeah, it's I was going to go visit my mom and my brother.
Awesome.
They live in Savannah, man. It's great. Like the next 3 days, I'm just gonna chill. I'll be honest though, I did not think Donald Trump was gonna get elected. Everything that I was seeing in the data points was saying that that like Kamala Harris has had this in the bag, especially because of the whole abortion thing. But my faith in, I don't want to say my faith in humanity because it's probably the wrong thing to say, but my faith in the people to ignore identity politics and instead focus on real policies is a little restored. And I feel like I should have a little bit more faith in the American populace. People are not as swayed by propaganda as much as we think. And I think a big part of that is because of Elon Musk and X and Twitter. Because I think those platforms, that openness of that platform is basically what galvanized people to look for more information. And they stopped trusting the media because the media was clearly biased. And I don't know if you guys saw what Trump said today about the whole censorship thing, about how he's going to try to dismantle the deep state.
I didn't see that. I didn't see.
You also got to see it, man. I mean, he's got a pretty strong mandate, and he is going after a lot of the people that used disinformation as the excuse to do mass level of censorship, right? Yeah, and it's kind of crazy because, I mean, dude, do you want to live in a world where literally, like, you're just getting fed propaganda from like one side?
No,
it's not healthy. Not a healthy society. So it is what it is. Yeah,
So,
but
Chris,
how are you guys doing? How are you managing your portfolio right now? Are you guys thinking about trimming some positions and going into more cash, or you're just like, let it ride?
well, right now I'm letting it ride, but I'm gonna throw something out there, and this is not a burn. I think it could be time to really consider the melting ice cube. When I look at the metrics, and they have not reported yet, I don't believe.
I think Chris is not in Snowflake anymore. I think he's out of it.
No, but I'm just saying now.
Oh, now you want to buy it?
Think about this. They have not reported their latest quarter, I don't believe. And
not yet.
They are trading at 47 times free cash flow. Okay. Palantir is trading at 133 times free cash flow.
Yeah.
Snowflake's forward EPS growth is supposed to be 140% over the next 2 years. They're trading.
They're going for profitability now.
Still at a high multiple. Palantir is trading at, what is Palantir's freaking, what Palantir finish at today? 57 a minute?
58.50.
Jesus Christ. So Palantir is trading at 104 times 2026 earnings. Snowflake is trading at 86 times. And if they really do grow EPS that much and improve margins, they could be a very interesting company right here, considering the market cap's only 40 billion.
Yeah, no, I agree, Steve. The only thing is, I'm probably going to wait until after January before I even try to take a look at it. Only reason why is because the December 2027 contracts come out then. So the strategy I'm probably going to be running, if I feel confident in them being able to get back to growth again, because that's the thing. You always have these like weird growth curves where things go up and then they kind of growth kind of slows down. But then you have this year over year comp that comes in, and it looks like the next year you're growing like crazy. Very similar to Palantir, where last year, same quarter, they were growing at 12%. Now they're growing at 30%. But that's because of the law of numbers, right? So
yeah, I want to see what the new quarter is.
Yeah, if there's any indication that growth is reaccelerating and costs are stabilizing, I mean, not to mention they're doing a crazy amount of share buybacks because they are generating a ton in operating cash flow. So the dilution isn't even there to really like hold this thing back from being like a value play. But the thing is, like, this is where you have to just take a step back, do your analysis, figure out what the earnings are going to be like, not today, not tomorrow, but 5 years from now, and then base your investment on that. There was this one hedge fund guy that literally changed my life. He's like, stop looking at earnings next year and the year after. Just look at earnings 5 years out or 10 years out and do a real analysis. Not like a DCF and all the other bullshit like that. Basically, you can, fund around numbers up, down, left, right to like justify your stock price. But really do a hardcore analysis on what earnings are going to be like. Then look at the industry averages, what they're trading at, and then find out if there's deep value there. And literally just when you see that come up, just buy it and buy hard. And that's the way that I interpret it. But the way that I'll break it down for like retail investors in the chat and make it very simple is if you buy a company that's 100 PE, but in 5 years their PE is going to be, 10 based on the current growth rate, just buy it now, in which case now what ends up happening is 5 years, that PE is still going to probably be elevated, especially because if it's still growing and it's a growing business and they, do like share buybacks and all these other things, the PE should probably be around 20, 30, which means that in the future, if you're looking out, you'll do much better, So stop looking at today's PEs and look at 5 year PEs and say, okay, what's the PE going to be for this company in 5 years? And what does this PE usually trade at? Like, or that PEG ratio, what does it trade at? Especially if it's able to maintain its growth at a pretty even keel, which a lot of businesses, they can safely grow at a predetermined amount per year, without slowing down. So finding businesses like that, bro, you'll be straight. And that's one of the reasons why I'm in the cruise lines. A lot of people left the cruise lines for dead, but dude, they've got so many different catalysts that are coming, and their EPS is just growing exponentially for the next. And the thing is, you can project out what the EPS is going to be 4 years from now very easily based on some of the calculations that we're doing today. So yeah.
All right. Appreciate you, Chris. Enjoy the little vacation. We'll talk to you later.
All right. Take care, guys.
Enjoy the vacation.
Bye-bye.
Wow. SoFi freaking is at 13.
I told you that. Yes, it is. Obviously.
Jesus.
That's what we started that with the show. All right. We got to end this. Thank you, everybody, for being here. This was awesome. I will see you guys literally in 4 hours because I'm live 24/7. So we'll have
Your wife is live.
Steve and I will be back literally at 11 p.m. So
yeah, 5 hours.
5 hours. Yeah. Everyone go get some food, get some dinner. If you care about Palantir.
You know what? We should freaking have Matt fund the Pokemon business.
Matt, yeah. No, he would invest in it. I think I would invest in it, bro.
All right. I'm going to write a business plan. I'm going to send it to the three of you. We'll see what happens.
Dude, you don't need to send me a fucking business plan. Just tell me where to write the check to, and I'm done. I don't need to see a business plan.
Who writes checks? I don't want you to give me
whatever, the wire, whatever.
Check. That would involve me fucking going to a bank.
I'm investing in you, Steve. I'm not investing in your business. I believe you know this market, and I'm like, all right, Steve, we'll figure it out. So
I mean, it's all predicated on if we can buy enough to get distribution. Otherwise, it's going to be very hard to make it work. So it's all predicated on that. And I really don't know how much money I have to put up to do that, because these places, the distribution companies do not want to give distribution to YouTube people unless they have a physical storefront. So
why would they want to give it to YouTube people?
They just don't want to give to Rip and Shippers distribution. They want distribution to go to the local game stores. So I got to figure out a way around that.
Well, I got to connect you with my boy. My boy streams on Whatnot every day and sells a lot of inventory. So I got to get
the only question you got to ask him is, does he have an account with Southern Hobby or one of those big distributors, or does he have a deal worked out with a shop where he is telling him, I'll take 30 cases of this, and that guy's increasing his allocation and getting his price point down. So there's a few things. But look, if anybody can get me in a position to build an ETF, I'm happy to do it. I don't feel like going for all my licenses, but see a lot of people say that. I would definitely do an ETF. I just need somebody to sponsor it.
Oh, an ETF.
You know anybody?
For doing an ETF? No, but the ETF, the problem is the ETF, you need at least $500,000 to start the ETF.
No. That's the easy part. The easy part is getting the startup costs. It's getting somebody to sponsor it because I don't have the licenses.
For an ETF?
Yeah.
No, but all that is white label, dude. Like, you don't need a sponsor. There's so many white label companies.
Yeah, but you pay so much for that.
That's what I'm saying. You need $500,000 in fees to get it ready. But if you're managing $20-30 million, $500,000 should not be a lot, right? So you should have.
No, because you can't charge. You can't. To do it right, you have to be fair with the expense ratio.
No, I'm saying, and I'm not saying expense. I'm saying you personally should be $500,000 liquid if you're going to manage upwards of $50 million. Like you shouldn't be managing that much money if you don't have $500,000 to spend on the fees. Like logically, right?
Well, I don't want.
Or you should be able to convince an investor to give you that $500,000 to get.
I don't want to spend my money on the fees.
Well, then why would you want to manage other people's money? Like that's the problem with these fund managers, bro. They always want other people to pay.
If people want me to run an ETF, I'll run an ETF. But it's got to be sponsored. Like I have no interest in paying those fees out of my pocket.
No. All right. Thank you, everybody. We'll be back. Palantir Weekly, 11 p.m. Incredible run, incredible week. Thank you all for being here every single day. It's been a awesome week to be in the stock market and to be part of the investor class. So thank you, everybody.
You know what? You should ring the bell. You should ring the bell.
Dude, ringing the bell, Steve, you don't understand.
You should ring the bell on how good just to end the week.
Ringing the bell is an art. Okay. There's a
moment. This calls for it.
First of all, everyone's tired. People are like, this is not a ring the bell mood. Like they were ending the stream. People are like, oh, like it's. But when Palantir hits 58, you know what I was telling today? I was saying on the market open, it was so funny because remember on the market close last week on Friday, I was you were like, all right, what are you gonna do? And I'm like, oh, I'm staying on stream. You're like, why? I'm like, oh, we want to wait till see Palantir hit 51. And you were like, you're just staying on stream to see Palantir go up by $1. Like that's just gonna happen. I'm like, yeah, like it's close. We're gonna see it hit it. And it was so funny because this morning we were.
You got to give the people
58. Like
the people want the bell.
No, but it was so funny because it's like we're just waiting to see the stock go up, and in your head you're like, the stock doesn't just go up. There's billions of dollars moving on market cap. But we're like, we'll just wait to see 56, 57.
It's crazy.
Yeah. Crazy. All right, I think we got to give people the bell. Thank you everybody for being here. Incredible week in the stock market. This is what it means to be an investor, and thank you all. So grateful for you guys being part of this community. The stock market is now closed today. All right, everyone. I'm a good role model. Thank you all. Appreciate it. We will see you guys 11 p.m. tonight for the market close.
Later.
Not market close, Palantir Weekly. At this point, dude, I just go live forever at this point. Bye, everyone. Have a good one.